markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is the Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks getting hammered, and bond yields, they're jumping with the dollar. Traders slashing their bets for the Federal Reserve rate cuts this year after that blowout jobs report that we got at 8:30 Wall Street time. The economy in December adding the most jobs since March. The unemployment rate also unexpectedly fell. So this caps a pretty strong year. Separate data then showed consumers' long-term inflation expectations jumping to the highest since 2008. So what does today's jobs report mean for stock investors? We earlier put that question to Rebecca Patterson of Bridgewater Associates.
As long as the consumer is holding in and they have jobs and the confidence to spend, and today's data says they do, then I think you can stay in equities. Now, given valuations, the upside's going to be a little more limited unless we keep getting positive surprises.
Right now, the S&P 500, 98 points lower. That is down 1.7%. The Dow down 667 points. And the NASDAQ 100, the tech-heavy NASDAQ 100, 404 points lower. That is down right now 1.9%. 10-year yield of 5 basis points, 474. The twos, 10 basis points higher. That's at 436. The 30-year is up a basis point. That is, I'm going to call it 495 right now. Some of the individual shares on the move. Delta Airlines profit beating estimates for the final months of last year. Delta shares, they're up 10.4%. Walt Disney, Fox Corp, and Warner Brothers Discovery scrapping plans to create that joint sports streaming service. And you have Warner Brothers Discovery, that is down 4.2%. So what's the quickest way to get attention on Wall Street? Say the word bonus. Deutsche Bank says today it's planning to raise investment bank bonuses by about 10%. That's actually pretty much in line with the other investment banks on Wall Street. But, that was, you lived for your bonus, did you not?
Yeah, I mean, there's this period of time where my bonus was about 95%, 99% of my total compensation. I mean, it's just, it's the make or break number. I mean,
and then he'd go out and spend like a drunken sailor on shore leave.
Municipal bonds, New Jersey municipal bonds. Saved every penny.
That's kind of boring, but anyway.
Well, that's me.
I thought maybe a Ferrari or something like that.
Yeah. No, we had a minivan for about 20 straight years.
Oh.
A series of minivans for about 20 years. We all done there?
We are all done. That is your plan. Anyway, have a good weekend. So I'm out of here. Have a great
our mind is.
Bye-bye.
All right, John Tucker, thank you so much. We appreciate that. John Tucker with our flash there. Norma Linda sitting in for Alex Steele, who is out today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube, so check us out there. Busy day at the Supreme Court. We've got the Supreme Court saying that Donald Trump was sentenced to no jail time in his hush money case, despite being convicted of 34 felony counts. So you've got that. Then they're also hearing arguments on TikTok. Does ByteDance, the parent company, need to sell TikTok by a certain date? And coming up in just a couple of weeks. Kurt Wagner, tech reporter for Bloomberg News, joins us from Denver, Colorado, I believe. Kurt, what's the latest on this TikTok case at the Supreme Court?
Yeah, well, the oral arguments are still ongoing. They started about an hour and 45 minutes ago. We heard first from TikTok's lawyer, who spent, that first hour talking about how this was a free speech issue, right? That banning TikTok amounted to an infringement on the First Amendment rights of American citizens. The justices really did not seem super convinced, in my opinion, with that argument. There was a lot of pushback on, whether that was actually the case, because foreign entities, they argued, in this case, ByteDance, the owner of TikTok, or even the Chinese government, they don't have First Amendment rights. And so there was some pushback there. I think again, we're halfway through. So far, it does not seem to be going great for TikTok, in my opinion. But we have yet to hear them question the government's lawyer, which should happen sort of in this next hour or so.
So, Kurt, some U.S. investors have expressed interest in buying TikTok, like Shark Tank's Kevin O'Leary and then billionaire Frank McCourt. Is this something at all that's in the cards? Is ByteDance budging at all on the idea of a sale?
So from what we've heard to this point is that ByteDance is basically not willing to get rid of this crown jewel of theirs, right? They don't want to hand this over to someone else. It also would be very technically challenging for them to actually carve out the US portion of TikTok while still maintaining sort of the rest of the global elements of it. Mm-hmm. So I think there's a technical challenge as well. Now, they've said they're unwilling to sell in part because they still had legal levers that they could pull, right? But this is sort of the end of the road for them on the legal front. So if they get through the Supreme Court hearing and they're still on track to be banned in 10 days, their tune might change, right? But as of now, from everything we've heard, ByteDance has basically said they're unwilling to part ways with this app.
So what exactly does that look like if TikTok were to be banned? Of course, we're coming up on this deadline, I believe January 19th. You can correct me on that, but what does it look like? Or is the app going to be removed from everyone's phones? What does it look like in action?
Yeah, it's a little bit of an unknown, but from what we've gathered, again, through our reporting, is that the apps would be removed from the app stores. So you would not be able to get it within, Apple's App Store or the Google Play Store. It would still exist on your phone because it's already downloaded there. The issue is that it would just slowly erode over time, right? So because you can't download updates from it, because there's no longer that way for the company to fix bugs or tweak things, it would just slowly get buggy and eventually stop working. Now, I think the bigger issue is, will people migrate before that, right? Like, it doesn't necessarily matter if it's on your phone if no one's posting there anymore and all the creators have gone to a rival platform. So I think part of this will be a technical thing that will happen over time, but then part of it will be a cultural internet thing, which is, do people simply leave the app and go elsewhere right away?
What is ByteDance just in general saying here? Because, boy, there's an awful lot of value here in that U.S. business. Yeah. I can't imagine that scenario that you just described, where this thing kind of just withers away. Have we heard anything definitive from ByteDance other than, I guess, defiance?
No, we have not, and I think the issue is that you're right. This is a lot of value to simply let go to zero. But on the other hand, it's a lot of value to put in the hands of a, potentially American competitor, right? Like, they don't necessarily want to hand this over and watch it blossom with some other owner as well. And so there is a chance, I truly believe there is a chance that this sort of just goes to zero in the U.S. at some point. I don't know, again, if that tune will change once the Supreme Court hearing is over and there is a decision from the court. But, I think you mentioned Frank McCourt at the beginning of this conversation. We had an interview with him a couple weeks ago. He thinks the value of TikTok, just the U.S. business without the algorithm, right? That's the very valuable part, is a $25 billion business. So, I mean, it is not a small thing by any stretch. If it's worth $25 billion, and that doesn't even include sort of that key technology layer that determines what everyone gets to see on the app.
Right, and to that point, I know China is TikTok's biggest business, but the U.S. definitely has the most TikTok users for them. But I mean, as we're thinking about this and how it could potentially play out, what are the last things that could really change the tide of these discussions?
I think the Supreme Court stuff is, I don't know if there's much that can change that at this point, but I think, President Trump is really the last remaining wild card here, right? So the ban is supposed to go into effect on January 19th. President Trump is inaugurated on January 20th. And it's unclear at this point what levers he would be able to pull. But, there's speculation that he could tell the Justice Department, hey, don't enforce this ban, right? Like, just simply let it go. Or that he could try and, broker some kind of deal after the ban has kicked in so that maybe TikTok's offline or out of the app stores for a few weeks, but then they come to an agreement shortly after that everyone feels satisfies these security concerns. So I think the Trump element here is something that is just a wild card. We won't know until he's in office and determines how important this is to him. But he has said he does not want TikTok to go away, so we have to presume that means he's going to try to do something when he gets in there.
All right, Kurt, proud graduate of Santa Clara University. On a scale of 1 to 10, what would you rate your time there, 10 being the best?
Oh my gosh! Wow, what a curveball! 10 out of 10. Santa Clara is awesome. I loved it. I came from rainy Seattle, so coming to warm California was a real win for me. That's for sure.
All right, my last offspring out of the crew is a sophomore there at Santa Clara. He would say the same thing. Big fan. Absolutely. Yeah, I don't think he's ever coming back. Let's be honest. All right, Kurt Wagner, tech reporter for Bloomberg News, joining us from our plush Denver, Colorado offices there. We have bureaus basically everywhere. You turn around, we've got, Bloomberg News has got a bureau. That's why we have some of the best reporting in the business, arguably the best reporting in the business. S&P future off about 1.6%. Coming up, Will Wade, Bloomberg Energy and Climate reporter on the LA wildfires, as well as a Constellation big energy deal in the marketplace today.
This is Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, Norma Linda, in for Alex Steele here today. I'm Paul Sweeney. We're live in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Of course, the big news story of the week have been the terrible fires in Los Angeles, and we've been trying to get some different angles on that all week. Will Wade joins us, energy and climate reporter for Bloomberg News. Will, thanks so much. I appreciate getting some time here. We want to talk to you about the Constellation deal as well in the energy space. But first, anything to add on these LA fires?
I mean, the fires are just tragic. They're huge. We see that CAL FIRE's just ranked the Palisades fire as the third most damaging in state history. The Eaton one is right behind it as the fourth. You know, of course, the worst was the 2018 Camp Fire that destroyed the entire city of Palisades. But these things are still burning. And, you know, there's still 150,000 people that are under evacuation order, including some of my family.
Talk to us about that. Do you have some of your family in that part of the world?
Sure. My aunt lives in North Pasadena. She was evacuated on Tuesday. She's doing fine. She's rattled, but I've been tracking the progress of the fire. It's kind of getting closer to her house. I really hope it does fine. It's actually a really nice house. They use it on the Apple TV show Shrinking.
Oh, is that right?
Yeah, it's a really nice place. And then, like, I heard from my mom yesterday. She said, "Hey, remember that restaurant I took you to brunch last summer when you were visiting? Yeah, it burned down. That was up on North Lake Street." So it feels very personal to me.
Yep, more and more stories coming out.
Yeah, I mean, when you think about a lot of these stories, some people didn't even have the opportunity to go back to their homes to grab items, especially as the evacuations have been in place. Have your family members spoken at all to that experience, or what have you been hearing on the ground?
I know that my mom was telling me that her aunt left, and my aunt left in such a hurry. She left some, important medication behind, and they were able to go back and get that. A neighbor was able to get in, but it's unclear when they're going to be able to go back. They're not very contained right now. The Palisades fire is still only like 8% contained, and the Eaton one, that's the one in Pasadena, is only 3% contained. Those are not big numbers.
Yep, absolutely. All right, well, hopefully some good news coming out of that part of the world soon. Let's talk about, in your world of reporting there, Constellation Energy surged after it agreed to acquire closely held Calpine Corp for $16.4 billion to create the largest fleet of U.S. power stations. Talk to us about this deal. What's going on here?
So Constellation already is notable. They have the biggest fleet of nuclear power plants, and their shares have gone up like more than 100% in the past year, because like the last year, all we've seen in electricity is more and more demand for electricity from data centers and artificial intelligence and electric vehicles and people shifting their homes to electric heating and gas heating. And basically anyone who's got electricity to sell is in a really strong position. So Constellation went out and bought Calpine, which is the biggest gas provider. They've got the biggest fleet of gas power plants. And so now they're going to have together the biggest power plant fleet in the entire United States. It's going to be enormous. And it comes at a time when power demand is just going up in ways that we haven't seen in decades. And the utilities weren't really ready for this. That we didn't see the AI boom coming a year ago. And so now, if you have a power plant, you're in a great place, and it takes years to build new ones.
Is this transaction setting the tone for M&A activity in the energy space more broadly? What's the outlook for the return of more deals in 2025?
We could see more. I'm hearing a lot of people talking about interest in energy transactions, and it used to be one of the sleepiest corners of the M&A space. People thought, power plants were just like super boring assets. They just make power and sell power, and utilities had like reliable dividends that your grandmothers always loved. But the share prices for so many of these companies have just surged in the past year. So, I mean, it's given them money to go shopping.
Well, let's step back in your space, just the greater energy space here. Where does nuclear fit in here? We've had some entrepreneurs come in here and say, hey, we've got some new technology, tiny little nuclear plant. I'll put it next to a big, data center, and it's a good way. It's a good option. Talk to us about that type of stuff.
Okay, so on paper, that sounds like the perfect combination. These small modular reactors can go next to the data centers. The reactors run around the clock. The data centers run around the clock. It makes a lot of sense. The thing to keep in mind is the time frame, because we're not going to see any of these new reactors for years. Okay. Maybe a couple by the end of the decade, most likely a 2030s thing. But these are just very, very slow-moving projects. And the data center companies, they want as much power as they can get, like yesterday. They need it now.
Yep. All right. So maybe
we're going to see a lot of gas.
Yes. Yeah. I think you're right. I think we've got some of that in this country. Will Wade, thanks so much for joining us. Will Wade, energy and climate reporter for Bloomberg News, joining us via Zoom, and we appreciate sharing some of his family experiences that some of his family members are having out there in Los Angeles as those folks continue to deal with a very, very difficult situation. We heard from Rob Carolan, Bloomberg meteorologist, earlier in the hour. A couple of days here of some reduced winds, maybe throughout the weekend, and that's a would be a big help. But then, unfortunately, the forecast calls for those winds to pick up next week. So maybe the firefighters can get a better handle on some of these fires over the next several days. Again, today's market action being driven in large part by the economic data we saw here today. Better than expected jobs numbers, suggesting that the Fed can put off rate cuts, and that's kind of what we're seeing in the market. The WIRP functions suggest the first rate cut won't come until October, and we're seeing the stock market off 1.7% and bonds higher. Coming up, Balance and Power with Joe Matthew. Lots to talk about Washington, D.C. with inauguration coming up in just a couple of weeks. The court ruling here in New York, lots to talk about. Balance and Power, Joe Matthew, after this global news update.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. No punishment for President-elect Trump at the sentencing for his hush money conviction. He spoke to the New York courts from his Florida home.
This has been a very terrible experience. I think it's been a tremendous setback for New York and the New York court system.
Judge Juan Merchan has been a frequent target of Trump's verbal attacks.
It is the legal protections afforded to the office of the President of the United States that are extraordinary, not the occupant of the office.
CBS's Weiju Jiang says Trump will take office in 10 days as a convicted felon.
That is going to be on his criminal record unless he is successful at appealing. And so this will hang over him throughout the rest of his years.
A day after a federal judge rejected a Trump bid to stop the release of a portion of special counsel Jack Smith's report, CBS's Scott McFarland tells us
we could get the final report of what special counsel Jack Smith found in his investigation of efforts to overturn the 2020 elections. An appeals court in Atlanta could free up the attorney general to release that today.
Fire officials now say the largest blaze in the L.A. area, the Palisades fire, is 8% contained. The fires are blamed for at least 10 deaths and the loss of 10,000 homes and other structures. LAPD Assistant Chief Dominic Choi.
We received a 911 call that a suspect was attempting to light a fire in the community of Woodland Hills and was being detained by residents. Officers from LAPD's Topanga area responded and took that suspect into custody.
The U.S. Supreme Court hearing arguments today on TikTok's appeal of a law that could ban the platform.
Congress and the federal government say TikTok poses a huge threat to national security, and Supreme Court Justice Brett Kavanaugh says.
Just on the data collection, that seems like a huge concern for the future of the country.
But lawyer Jeffrey Fisher, representing TikTok users and content creators, says
even if all this act goes into effect and the law goes through, TikTok gets to keep all the data.
Allison Keyes, CBS News, Washington.
A winter storm is making life rough in much of the deep south today. A Delta jet aborted takeoff in the snow in Atlanta. 4 people suffered injuries. Still big water problems in Richmond, Virginia. Mayor Danny Avila.
Our boiled water advisory remains in place for now, and we're making headway on the testing process to confirm that water supply is safe for drinking.
Crews working to restore a reservoir system that was shut down after a Monday storm caused a power outage. The government says employers added 256,000 jobs last month. The Dow is down 700 points. This is CBS News.
/free.
It's another big night tonight in college football.
Ohio State and Texas meet in the second national semifinal game, the Cotton Bowl, in Arlington, Texas tonight. And Longhorns head coach Steve Sarkisian couldn't be prouder of his players and coaches.
It's an honor, obviously, be in the semifinal game. You know, I think it's a credit to our players and to our staff, the work that they've put in.
It's been 19 years since Texas last won a national title. It's been a 10-year drought for Ohio State. The winner advances to the national championship game to play Notre Dame in Atlanta on January 20th. Erica Herskowitz for CBS News.
3 global monitoring groups report 2024 was the hottest year on record, the first time the rise was more than 2.7 degrees Fahrenheit over the year before. Primary reason, they say, accumulation of greenhouse gases. American scientists are expected to report similar findings today. I'm Steve Kathan, CBS News.
Between all the holiday parties, from the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Donald Trump will enter the White House with a criminal record. Welcome to the fastest show in politics. As the president-elect is sentenced to no jail time in his hush money case in New York, this just developing a short time ago, 10 days out from the inauguration. Jobs Day brings a hotter than expected reading and a whole new reason to worry about interest rates. We'll talk with Anna Wong from Bloomberg Economics, who came the closest in predicting the number today. Lawmakers are packing up for Florida. Big party at Mar-a-Lago this weekend, and one Democrat will be there, too. We'll get into the politics with our signature panel today. Bloomberg's Rick Davis and Jeannie Shanzano along the ride. After we check Wall Street, it's not a good look right now. Charlie Pellet has his hands on the markets for us in New York. Charlie?
Hello there, Joe Matthew. Indeed, not a lot of good news for the bulls today, at least in terms of the equity market response to this morning's jobs report. Here's where we stand. S&P right now down 107 at or near session lows. We are down by 1.8%. Dow Jones Industrial Average also in the red now, down 741 points. That is a decline of 1.7%. NASDAQ down 418 for the NASDAQ Composite Index, a drop there of 2.1%. Got to be worrying about small caps. Right now, the Russell 2000 is down 2.7%. The 10-year, 4.75%. The 2-year, 4.37%. We did see the 30-year at 5%. Right now, 4.95% on the 30-year. Gold surging $26 the ounce, up 1%. West Texas Intermediate crude back above $76 a barrel, up 3.2%. And Bitcoin up 1.6%, 93,620 now on Bitcoin. The big story today, job growth topped Wall Street estimates, and with that story, here's Bloomberg's Vinny Del Giudice.
So much for a slowdown. America's economy added more than 250,000 jobs in December, the largest gain since last March, and the unemployment rate edged lower to 4.2%. The data confirmed the labor market held up last year despite high interest rates, inflation, and political uncertainty. For all of last year, the U.S. economy added 2.2 million jobs, below 2023, but above the 2 million jobs created in 2019, the year before the pandemic. Vinny Del Giudice, Bloomberg Radio.
Constellation Energy has agreed to acquire closely held Calpine Corp for $16.4 billion to add scores of power generation assets across the U.S. Constellation Energy up now by 23.5%. And as we have been reporting, Donald Trump, the first former U.S. president convicted of a felony, has been sentenced by a New York judge to no jail or probation for his hush money case. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. Bringing you all of the information you need today, not just Wall Street, which, boy, does not feel good right now. And that's why we stay in touch with Charlie throughout the fastest show in politics to see what's happening on this Jobs Day. Of course, it has its own look. The news about Donald Trump breaking a short time ago. We'll get into this. He is not going to jail. If you listen to this broadcast or watch us on YouTube, you knew that already. But he will enter the White House with a criminal record, sentencing a short time ago. This is the New York hush money case, the Stormy Daniels case, sentenced to no jail time. We'll have more on that coming up with Wendy Benjaminson. Want to dig further into jobs, though. This is big stuff today, obviously, looking at the market reaction and trying to get a sense of exactly where this job market is as Joe Biden leaves the White House. This is the last one. This is the last report you're going to get. And we spent some time earlier today knowing that this number blew the doors off here. The most jobs since March, unemployment rate down unexpectedly. The acting Labor Secretary Julie Su spoke with us earlier on Bloomberg with Katie Greifeld. Let's listen.
Today's numbers following on the heels of consistent, steady, stable growth, 16.7 million jobs since this president came into office. He is the only president that has had positive job growth every single month of his presidency. And that is what we hand off because we knew that that's what the American people deserved. And we knew that if we focused on what was good for workers first, that we could have a recovery like no other. And that's certainly what this month's numbers reflect.
Yeah, I believe we're looking at 48 months with consecutive payroll gains, and that, of course, is going in data going back to 1939. I do want to talk about the manufacturing sector, because if you're looking for some pain, you're going to find it there. In the manufacturing sector, shedding jobs again in December. What do you think is going on specifically in that industry? Can we draw a line between those job losses to all of the different labor disputes that we've been seeing?
No, I would draw the line to really decades of economic policies, trade policies that have not favored workers and of commitment to jobs, which is also why President Biden came in and said, we're going to invest in manufacturing. As a result, the recovery that we've seen since 2021 is the only economic recovery in this century in which the manufacturing sector actually bounced back from a crisis like the one we inherited. And so there's more work to do. There's no question about it. And we know that workers in states where manufacturing has been the foundation need continued investments. And there's some uncertainty about that because the incoming administration has raised questions about whether those investments would continue. But what we've seen is that doing that, having the Inflation Reduction Act, right, having investments in bringing manufacturing back to the United States, into our heartland, is the right way to build the economy.
Julie Su's last jobs day, the acting labor secretary with us earlier today on Bloomberg, with the ambience of the fire alarm ringing at the Labor Department. Is there symbolism there? By the way, can we get an indoor studio for the next labor secretary? It was like 3 degrees when she was out there in the snow and the wind and the whole thing. It's not like that at every agency. They're always out on the porch. Right, there's a beautiful shot on TV, but the poor secretary ends up freezing. Maybe there's symbolism there, too. We better ask Anna Wong, who is our winner today on The Price is Right. Bloomberg's chief U.S. economist at Bloomberg Economics. You came closest. You have the highest consensus, highest number in the consensus when it comes to this jobs report. What do you know that no one else did?
So the job market is warming the winter around us.
Yeah.
So that's the only hot things. So look, we track high frequency data, and that data, when I saw the data a couple weeks ago, I was surprised by this broad-based, unseasonably strong hiring across sectors. So this is why we made this forecast. Our forecast is always made based on actual data. And so I think there is genuine signs that the labor market is stabilizing. And Joe, you know me, I have been pretty down on the labor market for most of last year. I would still say that, the non-farm payroll is still overstating the degree of hiring. And in the next month report, we're going to see benchmark revisions, which will be downward revising most of the data last year. Nonetheless, I will say that this report is genuinely good, and it would be rational to be hopeful about the future.
Well, yeah, the market's freaked out. The S&P 500 down 2%, same as the NASDAQ. The VIX is up 10%. Are we giving up on interest rate cuts?
I think the VIX in the stock market is reacting to definitely the fixed income traders pricing out one whole
4.7
rate
on the
cut.
10-year here.
Exactly. So immediately after the payrolls report, the traders were pricing out one rate cut out of 2025, and now the earliest for a rate cut is September now. So it would be a pretty long pause.
What's inside this report that has your attention when it comes to wages, when it comes to participation? What should we know?
Yeah, I think that the private sector employment jump in the household survey really caught my eyes, because I thought that the household survey was going to show more weakness because it doesn't suffer from the overstatement problems, measurement problems as the establishment survey. But we saw actually a very strong showing of private sector hiring, in particular the increase in hiring in retail trade sector. And I have to wonder whether some of that reflect that firms are front-running the tariffs, and we have seen anecdotes of firms stocking up before expectations of higher rate tariffs, and therefore that's basically boosting the logistics sector and retail sector.
So running like that, though, can lead to weakness later in the year.
Yes,
when do we feel
exactly. So that if that's the reason why there was such a strong showing in the trade and logistics sector, then one shouldn't expect this increase to be durable.
Fascinating. You close the border, you conduct a mass deportation, and what happens to the job market then?
Well, so if everything stays constant, as an economist would say, then if you reduce the labor force, you would actually tend to reduce the unemployment rate. However, it really depends on the details, which is where do these new migrants tend to work? So suppose that they tend to work in construction sector, which is undergoing a downturn, particularly in the South, then a reduction in the labor supply geared toward the construction sector actually would not really boost prices in the construction sector, given the slack in the market there.
There's been a greater conversation, and I don't know if this comes into the form of legislation or not, about work visas as a new element of the debate. Let's say lawmakers crack down on border security, but also raise the cap on H-1Bs. Would it have a meaningful impact on the job market, or would that be isolated to the tech sector and not show up in national numbers like these?
Yeah, I mean, from a pure economist perspective, so the economy needs more immigrants in sector that's experiencing shortages, and also it would be great for the economy to receive more immigrants in sectors that innovate. So in high tech sphere, we have a lot of foreign-born immigrants who are contributing significantly to TFP productivity increase. So I think that
and if you ask Elon Musk, he will tell you we need more.
Exactly. So raising the cap, so allow more to come in, actually would be great for the economy.
And would actually show up in numbers, though? Would you see something in the household or employment surveys where you'd actually make a dent in the data on a jobs day like this?
Well, I think not yet. So what we have seen is a labor force decline in the last, in November and October. That's more driven by cyclical hiring weaknesses in construction sector, leisure, and hospitality, which seem to have reversed in December. But I would say that the first sign of contraction in labor supply would be more due to cyclical forces like slowdown in hiring rather than deportations.
Gotcha. Anna Wong, always a pleasure. It's a clinic with Anna Wong, whose number in the consensus was the highest. We should have played Plinko while we had the chance with Anna. Thank you so much for the analysis, Anna Wong. We're standing by to hear from Joe Biden. I should mention that. We're going to have some remarks coming to you live from the White House about the deadly wildfires in California. And we'll bring you there as soon as he starts speaking. Stay with us on Balance of Power right here on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks lower across the board. Jobs Friday, lots of red on the screen. Bounce off the bottom on the S&P, but right to the numbers here. We're looking at a loss of 103 points on the S&P, a decline now of 1.7%. Dow Industrials down 715 points for the Dow, a drop of 1.7%. NASDAQ lower by 393 points, down 2%. The Russell 2000 index of small cap shares down 2.7%. 10-year 4.75%, the 2-year 4.37%. Did see the 30-year at 5%, right now 4.95% on the 30-year. Stocks getting hammered, bond yields climbing alongside the dollar. Traders slashing their bets for Federal Reserve rate cuts this year after this morning's blowout jobs report. Spot gold up $26 the ounce, gold up 1%. West Texas Intermediate crude surging 3.2%. WTI 76.28 a barrel, and Bitcoin up 2.1%, 94,075 right now on Bitcoin. Earnings news, Delta jumping after the carrier's profit beat Wall Street estimates. Delta shares, they are surging now by 9.2%. And Donald Trump, the first former U.S. president convicted of a felony, has been sentenced by a New York judge to no jail or probation for his hush money case. Trump plans to appeal the verdict and seek to overturn his conviction through the appeals process. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington, and once again, your host, here he is, Joe Matthew.
All right, sliding into the weekend with Charlie Pellet. Boy, let's see if we get any buying later on in the session here. We'll keep tabs on these tough numbers for you. 4.7 on the 10-year on a jobs day. Here we are. Welcome back to Washington, Donald Trump. It's going to be welcome back to Florida for everybody this weekend. How about it? We're freezing here in the nation's capital, and everybody's getting on a plane for Palm Beach this weekend, including John Fetterman. We'll talk more about that later. Did you hear he's going to be the Pope of Greenland, James? Yeah, the senator from Pennsylvania. Producer James walking us through the week every day here on the fastest show in politics. And we've got a big day at the Supreme Court. Speaking of below freezing, Tyler Kendall's been shaken out there in front of the Supreme Court for hours because she's doing God's work for us here on Balance of Power. What is happening inside that building behind Tyler, if you're with us on YouTube, is awfully important as TikTok tries to beat the ban. Remember, block the talk? I'll come up with more rhymes as I can over the course of the show, Tyler. These are arguments about the future of the platform following the legislation that said divest or ban. Donald Trump, of course, had a change of heart, and that's why we're here, Tyler. What's going on?
Yeah, hey, Joe. So right now, the U.S. Solicitor General representing the federal government is in the middle of her oral arguments before the Supreme Court, and she just said that if TikTok does not divest from its parent company, that could pose, quote, grave risks to the U.S. Now, we've also already heard from two pro-TikTok lawyers, one representing the company, another representing content creators, who made a similar argument that this is about freedom of speech and the First Amendment, and that if the app is ultimately banned, that could curtail the freedom of expression of its more than 170 million U.S.-based users. The federal government does not agree with that assessment. They say that this isn't about restricting freedom of speech, since there's still a viable path for TikTok to operate. They just need to divest. Rather, they're looking to restrict what they call a foreign adversary holding, considering that ByteDance's connections to China and what that could mean for national security implications. Now, Joe, I can tell you that it does appear the Supreme Court justices are a little more sympathetic to that argument. They have expressed some skepticism when it comes to TikTok's argument and freedom of speech, with Chief Justice John Roberts, Joe, even going as far as to say that Congress doesn't care what's on TikTok, they just care about who owns it.
Well, the calendar is pretty tough here, Tyler. It's a week from tomorrow. We've got the deadline here, right? I guess a little more than that. It's the day before the inaugural, 19th, a little more than a week. That would motivate, presumably, the Supreme Court to act pretty quickly here.
Right, exactly. We likely will get a decision in the next week or so before the 19th. But then, of course, President-elect Trump does take office on January 20th. If the ban, let's say, does go into place, although he has asked the Supreme Court to delay it, something that actually we heard echoed by TikTok's lawyers who said that the timeline, the deadline was unrealistic and, quote, very difficult, and that at the very least they would also like to see this delayed. But let's say that it does go into effect. President-elect Trump does have a few options. One, he could potentially tell his Department of Justice not to enforce it, but of course that could open him up to legal scrutiny. The other part of this is that there is a part of the law that would allow the president to pause the ban for 90 days if there is a negotiation underway for a divestment. However, that would actually have to materialize, and that actually came up in one of the questions. One of the justices asked if that was still potentially on the table, and the TikTok lawyer said that they weren't quite sure whether or not that was something that could happen. And then, of course, lastly, Joe, Trump could try to work with Congress to repeal this law in some way, shape, or form, but that seems highly unlikely considering the bipartisan support that it received back in April when it passed.
That's Tyler Kendall in front of the Supreme Court. Thank you so much, Tyler. Wow, that was a huge reminder of everything that you need to know about this case, and it does look like we're going to get a decision of some sort, even if the court decides to do nothing here imminently. Wendy Benjaminson is watching it for us. Not with me here at the desk today, but at World Headquarters in New York. Bloomberg senior Washington editor. Wendy, great to have you. I thought Washington had this figured out. It was the most bipartisan exercise we had, hating on China and banning TikTok. Then Donald Trump had dinner with Mark Zuckerberg or something. What happened?
Well, I think also he discovered how many followers he has on TikTok and how effective his campaign messaging was on TikTok. And if it's good for Donald Trump, then it must be good for the rest of us, goes his normal thinking. So he has decided that he no longer likes this ban, even though, as Tyler said, it was passed with broad bipartisan majorities, Democrats and Republicans, and Trump would have to use a lot of political capital to turn it around if it ended up back in Congress.
Yeah. So are Republican members who supported the divestiture ban suddenly on the wrong side of Donald Trump? How does that rationalize while they're all heading to Mar-a-Lago this weekend?
Right. Well, not yet, but I think it depends on what happens with the Supreme Court and what happens on January 19th when they hit the deadline. But I don't think he's going to start, doing his own whip count before any of that happens.
Got it. Wendy, we have more to talk about involving Donald Trump here, and it involves his legal situation. Sentencing day today. I guess he zoomed in or whatever platform they use, and in fact was sentenced to no jail time, which should not be a surprise. That was what we expected and what the judge said would happen.
Right.
But it is a fact now that he will enter the White House with a criminal record. Should we care?
Well, the Democrats hoped voters would care. They hoped they would care a lot.
Yeah.
Republicans don't. I mean, I even saw some campaign signs in the fall that said, "I'm voting for the convicted felon." So, there are people out there who believe Trump's line that this was a weaponization of the Justice Department by the Biden administration to get him. What struck me about his commentary at the sentencing was that he didn't seem to acknowledge that he had been convicted by a jury of his peers. He kept saying, "I was indicted for this." And then his statement afterwards was, this proves that the quote-unquote radical Democrats lost this case. No, he was not only indicted, he was tried and convicted by a jury. And this whole sentencing that Merchan went through today was part of the appeals process. Before he can appeal his felony convictions, he has to be sentenced. And so because he's becoming president in a week, they just sentenced him to, as you said, unconditional discharge, which just means nothing. And off he goes to the Oval Office.
It's interesting. This would not have happened today, Wendy, if the Supreme Court didn't want it to. He asked the Supreme Court to intervene here. And on a 5-4 vote, the court declined. Two conservatives, John Roberts, Amy Coney Barrett, joined the three liberals in this one-page order. What does it tell us about Donald Trump's appointees on the court, if anything, here? Are you looking at this in a different way?
A little bit. I mean, I'm not at all surprised by John Roberts siding with the Liberals on this. He is very much a creature of the process and things like that. It's becoming more and more evident that Amy Coney Barrett, despite her rulings or her opinions on the court in favor of Trump having broad criminal immunity, in favor of overturning Roe versus Wade, that on process things like this, she strictly follows the letter of the law. And in this case, there was nothing wrong with Donald Trump, private citizen, being sentenced today to whatever. She probably would have helped him if he were sentenced to jail time, but that wouldn't have happened. Neil Gorsuch and Brett Kavanaugh, the other two Trump appointees, seem to be increasingly in the Alito-Thomas, very conservative, a little more political camp on the court.
He was asked about this last night. He was back down at Mar-a-Lago pretty quickly after the Carter funeral because he had a meeting with governors, Republican governors at Mar-a-Lago. He was asked about the sentencing. He said, quote, "I'll do my little thing tomorrow. They can have fun with their political opponent," unquote. That would be the jury, I guess.
Actually, I think he was referring to the judge and saying, sure, they can do this thing and sentence me. He knew he wasn't going to get jail time, so it was low stakes for him, but it was a moment for him to get publicity again.
When are we going to see the special counsel report? This has been up and down this week. Wendy, I know we're covering this very closely in the newsroom. After this appellate court ruled, the Justice Department may release publicly Jack Smith's report. It looks like it will be one of the two components that focuses on Donald Trump's efforts to overturn the election. That will be made public before he's in office?
Maybe. The Justice Department hasn't said yet. Merrick Garland is certainly inclined to do so because certainly if he doesn't do it before the inauguration, the new incoming Attorney General, who is likely to be Pam Bondi, is not going to do it, and Jack Smith will be fired and dismissed. So if Merrick Garland wants it out, he's got about a week to do it. So we'll see if that happens. And what remains, as you were referring to, what remains secret is his report on the classified documents case. In that case, Judge Eileen Cannon, who has been handling that case, has appeared to lean toward Trump. She's a Trump appointee, and she has appeared to agree with his team more often than the Justice Department.
Going to Mar-a-Lago this weekend?
I wish only for the temperature. No, I'm going to be stuck in
nice,
frigid Washington.
It's a who's who, not just the five families it looks like are going down. You're going to have representatives from all of the factions of the Republican conference, including the Republican Main Street. They're going to be there too. Congressman Flood is going. Dusty Johnson's going. But Wendy, John Fetterman is going as well. The incoming Pope of Greenland. This is going to be a party on the patio.
John Fetterman of Mar-a-Lago is a sight I would like to see. But, I heard him this morning. I think he invoked Arlen Specter, who was another Pennsylvania senator a long time ago, who took on a very bipartisan attitude. And Fetterman said, look, I'm not the senator for Pennsylvania Democrats. I'm the senator for Pennsylvania. And wouldn't it be better that I'm on speaking terms with the President of the United States? Wouldn't that be better for my state? And, Amazing. It's hard to argue, but this really reflects a new attitude among Democrats compared to Trump's first term, where they were just literally the resistance. They called themselves the resistance, and they just hated everything. This time, 48 Democrats voted for a bill that speeds deportations, and now Fetterman.
Right. Wendy, we got a breaker here just across the terminal. Supreme Court signals it's likely to uphold the TikTok ban in the U.S. Block the talk. We'll get into it with our panel next. Wendy, thank you so much and have a great weekend. Wendy Benjaminson in New York. I'm Joe Matthew in Washington. We've got a lot more to talk about on the fastest show in politics. This is Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ very much in the red. Stocks are getting hammered. Bond yields are climbing alongside the dollar. Traders slashing their bets for Fed rate cuts this year after this morning's blowout jobs report. S&P now down 1.5%, down 90. We are off session lows, but still very close to the bottom. The Dow down 1.5%, down 654. NASDAQ right now down 335 for the NASDAQ Composite Index, a drop of 1.7%. Russell 2000 Index of small cap shares down 2.5%. 10-year 4.74%. The 2-year 4.36%, and the 30-year briefly touching 5% this morning, now at 4.94%. Gold up almost $30 the ounce. Spot gold up 1.1%. West Texas Intermediate crude up 3%, 76.16 a barrel, and Bitcoin up 2.3%, 94,220 on Bitcoin. The U.S. economy in December added the most jobs since March. The unemployment rate unexpectedly fell. Administration reaction to the jobs report from acting U.S. Labor Secretary Julie Su.
Today's numbers following on the heels of consistent, steady, stable growth, 16.7 million jobs since this president came into office. He is the only president that has had positive job growth every single month of his presidency. And that is what we hand off.
Acting U.S. Labor Secretary Julie Su. Disney, Fox, and Warner Brothers Discovery are scrapping plans to create a joint sports streaming service just days after settling a lawsuit brought against the three companies, alleging that the platform would squelch competition. And Donald Trump, the first former U.S. president convicted of a felony, sentenced by a New York judge to no jail or probation for his hush money case. Trump plans to appeal the verdict and seek to overturn his conviction through the appeals process. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet. Great to have Charlie along for the ride every day here on the fastest show in politics, and keeping tabs on the markets is awfully important today because you know what is up? While the broader market is down, we're watching Meta rise a little more than 1%, back above $618 because of the news, most likely on TikTok. If you're just joining us, we have news from the Supreme Court hearing arguments today on the future of the platform. Remember, they passed a law that said divest or ban, right? Block the talk. We did all of this here until Donald Trump decided to challenge this, suggesting that he might have a better solution for all of this once he gets in office. So arguments today in front of the Supreme Court. The deadline, I'll remind you, is on the eve of the inauguration. While Donald Trump is on stage at the Capital One Center down the street, the deadline for ByteDance to divest will take hold here. And we're talking about it because the Supreme Court is now signaling, according to Bloomberg News, paying attention to the arguments that are right now underway, that it is likely to uphold the TikTok ban on the U.S. And that's where we start our conversation today with our signature panel, Nothing Like a Friday with Rick and Jeannie. He, of course, partner at Stone Court Capital, Republican strategist, Jeannie, Democratic analyst, and political science professor at Iona University. Great to see you both. Rick, I thought we had this figured out. Of course, Donald Trump's evolution on this topic has brought us here to this point. It looks like the court might not follow him. This could be kind of an early stage loss for his administration, couldn't it?
Yeah, this is kind of a be careful what you ask for. Donald Trump kind of put this in play. It was one of those issues, along with China, that the Biden administration carried on. And then Donald Trump does a flip-flop on talk, but the Supreme Court didn't get the memo. Either that or they're just ignoring him. The reality is this is all about China. It's really got nothing to do with free speech or the technology or whatnot. I mean, you know, China is the big problem here, and ByteDance is the confederate for them. And unless ByteDance sells off their interest in the U.S. version of TikTok, I'm afraid you're probably going to see this disappear.
Wow. What are you hearing about it on campus today, Jeannie? Or do young people know enough not to pay attention, and if they do ban it, they'll get it on a VPN anyway?
Yeah, they'll get it on a VPN anyways. But I think, I've been listening very closely to the Supreme Court argument, and it is just fascinating because a lot of this is not at all what is being discussed in the popular media about should TikTok be banned or not. It's really about the power of Congress and the issue of the First Amendment, as Rick raised. And, listening to these justices, conservative and more moderate alike, the reality is Congress probably does have the power to do this. The government does have a compelling interest. And of course, even if you agree with TikTok and ByteDance and the attorneys arguing on their behalf that there is a violation of the First Amendment, there is no absolute right to free speech. We violate it. The government violates it all the time. So the question becomes, does the government have a compelling interest in violating it? And listening to these arguments, I'm hard pressed to imagine that in a few days, a majority does not agree that Congress has this right, and they let this ban go into place. I am not a supporter of this law, but that's not a question that the court is going to consider. They're going to consider Congress's power to do it. And I would suggest, it sounds like from the conversation, the lawyers for TikTok did not prove that Congress was out of bounds in doing this.
Rick, this seems for so many people to come down to a First Amendment case versus a national security case, and your point of view will determine which one you select. Do you agree?
I think it's a little hazier than that. I mean, the reality is the Supreme Court doesn't really even have to decide a case related to the First Amendment, because the point that has been made in this case is, if you change the ownership of ByteDance's TikTok in America, they still have the freedom to do whatever they want to do. It's like, it's not going to be curtailed, right? It's just the ownership is the issue. And that is not a First Amendment right. You don't have a First Amendment right to be a owner of a communication system. And if the U.S. government decides that we cannot allow Confederates of China, the CCP, to broadcast this kind of thing in our country, it has nothing to do with the First Amendment. It has to do with who those people are who own that vehicle. By the way, none of our groups could do anything like this in China, right? When you talk about parity, I know they don't have First Amendment rights in China, but they don't even have market access for this kind of thing. So when you really look at it from the perspective of who's the owner of this business in America, once you've decided that that's a pernicious impact on our country and potential national security threat, then it doesn't even matter what they're doing. I mean, and that was the option given to them by Congress. Let another owner who does not have that baggage do the work.
I'd like to hear from you on this, Jeannie. To Rick's point, if there's an allowance in this law, that's the whole point of this law, is there to sell the platform and keep it alive. Is it still a First Amendment case, even if a buyer doesn't show up?
That is what TikTok and ByteDance are hoping and betting on. I don't think the court goes in that direction, but I do want to take the other side of this, which is the effectiveness of this law. If this law is indeed a law to protect national security and protect our data privacy, why is it just addressed to TikTok? Because we know that it is very easy for other companies and other organizations to sell our data. It's done all the time to China. So, the effectiveness is something where I thought the lawyers for TikTok and ByteDance are absolutely right. Another portion of this is, with this law, it doesn't require TikTok to get rid of or expunge our data if you're on TikTok. It says they can keep it. So, one thing is this law constitutional? And I think the court probably says it does. Another thing is it effective from a national security perspective? And I think the answer there is absolutely not. Congress has taken an easy way out, a politically palatable attack on China, which does in the end probably very little to protect our data privacy. What we need is a full-flung data privacy law in this country. And that is something that Congress is not doing because, of course, we look at companies owned in the U.S. that they don't want to address, Meta, Google, and others. So let's get a data privacy law, Congress, if you want to be effective on national security. So from that perspective, I think there is an argument to be made on behalf of TikTok and ByteDance.
Interesting. Wow, this is a great conversation. I can let you know now the TikTok hearing has officially ended at the Supreme Court. We are done, as Greg Storer reporting on our behalf from the High Court, signaling it is likely to uphold the TikTok ban in the U.S. We'll have more for you on this. The Supreme Court has a couple of things in play today, as a matter of fact. As we told you, Donald Trump tried to challenge his sentencing today in the New York hush money case, actually went to the Supreme Court to try to stop this from happening. The court decided not to intervene. And so Donald Trump, in fact, was sentenced today as a criminal. He was on a Zoom type of platform. He wasn't actually in person in the courtroom, and he was sentenced to no jail time. Here's a taste of the president-elect during that moment.
This has been a very terrible experience. I think it's been a tremendous setback for New York and the New York court system. This is a case that Alvin Bragg did not want to bring. He thought it was, from what I read and from what I hear, inappropriately handled before he got there.
Rick, I thought Alvin Bragg did want to bring the case, but either way, without jail time, Donald Trump enters the White House with a criminal record. Does anybody care?
Joe, you may be the only broadcaster today that's fact-checking Donald Trump. The reality is that this is much to do about nothing at this point. The reality is, yes, he's a convicted felon for the purposes of the hush money case. His penalty was nothing, right? There was no fine, no prohibition, nothing. And by the way, that is the appropriate thing to do with a person who's just about to become, the 47th president of the United States. So I think this is played out, right? And it will go down in history as a major aspect of the 2024 presidential campaign, and you could cut it both ways, right? The law was blind to power, and they prosecuted a guy who was running for president. The president can certainly say that it was used as a political weapon against him, and he obviously took great advantage of it. So let's leave the rest to the history books. This is the biggest nothing burger of 2024, seeping into 2025. And I look forward to the next fun thing we talk about.
I don't know, Jeannie. Is this the way it should have gone down for the sake of the country? In the words of Donald Trump, he says it was a tremendous setback for New York and the New York court system. How about for the country? If they had sentenced him to some sort of probation for a week before he were inaugurated, as some people wanted to see.
Judge Marchand had no good way to go in this. I think he made the right decision on sentencing. I disagree with that. This is a nothing burger. The reality is, last night, the Supreme Court said in a 5-4 decision this could go forward. Donald Trump only needs one more of those folks to agree with him on appeal that he has immunity, and this sentence will be overturned. It was even one of his own, Amy Coney Barrett, who went with the Chief Justice and the 3 liberals on the court to say they weren't going to step in on this. And I think this and the fact that President Trump or President-elect Trump had a phone call with Justice Alito, reported by the New York Times, in the hours before they filed this emergency appeal is very, very important as we go into 2025 and beyond. We've got a Supreme Court who has said basically presidents are immune for all official acts in office. And we've got a Supreme Court justice who participated in an emergency appeal hours after talking to the president on the phone. These are part and parcel of what people are concerned about when they look at the federal judiciary as it pertains to ethics and recusals and all kinds of aspects. So that's important. That said, I have always agreed with Donald Trump on one thing. I don't think New York should have ever brought this case, particularly at the time they did it. If they wanted to do it, they should have done it 2016, 2017. That said, they did. 12 New Yorkers found him guilty, and he needs to be sentenced, and he was today.
Remember, Jeannie was writing about indictment fatigue a couple of years ago. Rick, we've got less than a minute left here. I just wonder, politically, put the law aside for a minute. Politically speaking, we talked about it in real time. Now that you look back on it, did this case help to re-elect Donald Trump?
Oh, I think all the cases did. Every time there was an indictment, his numbers went up. Remember, when we started the election cycle, he was trailing Ron DeSantis by a substantial margin. And Ron DeSantis ran a horrible primary campaign, and Donald Trump took advantage of persecution and prosecution by the Democrats. And, you know, look, kudos to Donald Trump for taking advantage of it. Nobody really thought this was going to inure to his benefit. The first series of these indictments, 85 of which happened in the normal course of the primary campaign. You know, nobody would have thought that was going to inure to his benefit. But arguably, every poll that we looked at during the course of that, including our own, said otherwise.
That's right. Incredible. And this one is played out, as Rick says. Our signature panel back in hour 2. Rick Davis and Jeannie Shanzano on this Jobs Day. That's why markets are jittery. Ben Harris from Brookings will be with us. Stay with us here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The high court signals it is likely to uphold the TikTok ban. Welcome to the fastest show in politics as the Supreme Court today hears arguments on the future of TikTok ahead of a deadline to divest or ban. I'm Joe Matthew alongside Kaylee Lines in Washington. Welcome to the Friday edition of Balance of Power. Kaylee, this just turning on the terminal right now. Of course, Donald Trump's new take on this, his evolving position, is the reason why we're here today.
Well, and considering the ban is slated to go into effect one day before Donald Trump is back in the Oval Office, next Sunday, January 19th.
That's right.
And incidentally, 10 days before he's back in the Oval Office, Donald Trump also was sentenced today and will become a convicted felon who is assuming the presidency. That sentence, of course, not really anything, no probation, no jail time, and yet it does solidify his status as someone who was convicted of 34 felony counts. And if that weren't enough for a Friday in Washington, Joe, we also have to talk about this blowout jobs report we got this morning.
Yeah, the markets don't seem to like it. At least the stock markets don't. We're at 4.7 here on the 10-year, and the stocks have been down broadly 1.5% to 2% throughout the day. Are we done with Fed rate cuts? That's the point?
Well, that's what some are thinking. Bank of America, I think, is actually putting potentially hikes back on the table this year.
Nice talk for the market, not so much. Charlie Pellet's been pulling his hair out a little bit in New York, I think.
Yeah, so let's check in on how Charlie's doing now after this 256,000 print on payrolls. Hey, Charlie.
Well, hello there. Good day from New York. What a week. Lots going on. A lot of moving parts to this market. But right now, right to the numbers, because the Dow, the S&P, NASDAQ, very much in the red. Jobs Friday. Stocks are getting hammered. Bond yields are climbing alongside the dollar. Traders slashing their bets for Fed rate cuts. The S&P at 58.32. It is down on the year, lower by 86 points right now, a decline of 1.5%. The Dow also down 1.5%, down 643 points. NASDAQ down 1.6%, down 312. Broad-based selling today with the Russell 2000 index of small cap shares now down by 2.4%. 10-year 4.74% with a 2-year that's currently yielding 4.36%. We did see the 30-year briefly at 5% right now, 4.94 on the 30-year. Spot gold up 1.1%, 26.96 the ounce. West Texas Intermediate crude rallying 3.3%, 76.35 a barrel, and Bitcoin up 3.7%, 95,510 on Bitcoin. Constellation Energy has agreed to acquire closely held Calpine for $16.4 billion to add scores of power generation assets across the United States. Shares of Constellation Energy up right now by 24%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet with a look at the post-jobs print reaction in these financial markets. Thank you so much. And incredible to consider that this is the last jobs report we will get under the Biden administration. Come February, when we get the January figures, Donald Trump will be in the office, and it will be up to him and his economic team to message whatever it is the data looks like at that time. But right now, obviously, as they look at the economy they're inheriting, the data's looking pretty good, even if it's not necessarily good news for risk assets.
Well, to consider the concerns people had 6 months ago about damage to the job market via rising interest rates, it surely does not appear to be materializing. And yes, you're right, Kaylee, this would be the last time Acting Labor Secretary Julie Su has to go outside and freeze in front of the Labor Department to talk to reporters. That's what they do every jobs day. They never seem to go indoors. But we did spend some time with the acting secretary to talk about this powerful number here, not just on job creation, but a lower than expected unemployment rate. She spent some time with Bloomberg's Katie Greifeld this morning. Listen.
From the beginning, we said the unprecedented crises facing this country required an unprecedented solution, an unprecedented response, including by the federal government. And that's what we have done. And today's numbers, following on the heels of consistent, steady, stable growth, 16.7 million jobs since this president came into office. He is the only president that has had positive job growth every single month of his presidency. And that is what we hand off because we knew that that's what the American people deserved. And we knew that if we focused on what was good for workers first, that we could have a recovery like no other. And that's certainly what this month's numbers reflect.
Yeah, I believe we're looking at 48 months with consecutive payroll gains, and that, of course, is going in data going back to 1939. I do want to talk about the manufacturing sector, because if you're looking for some pain, you're going to find it there in the manufacturing sector, shedding jobs again in December. What do you think is going on specifically in that industry? Can we draw a line between those job losses to all of the different labor disputes that we've been seeing?
No, I would draw the line to really decades of economic policies, trade policies that have not favored workers and of commitment to jobs, which is also why President Biden came in and said, we're going to invest in manufacturing. As a result, the recovery that we've seen since 2021 is the only economic recovery in this century in which the manufacturing sector actually bounced back from a crisis like the one we inherited. And so there's more work to do. There's no question about it. And we know that workers in states where manufacturing has been the foundation need continued investments. And there's some uncertainty about that because the incoming administration has raised questions about whether those investments would continue. But what we've seen is that doing that, having the Inflation Reduction Act, right, having investments in bringing manufacturing back to the United States, into our heartland, is the right way to build the economy.
One more here on manufacturing here, because both American workers and investors alike are looking for any potential future pains that could come. How much do you see this as a harbinger for future cooling in the labor market, or do you think that this is just attributed to cyclical factors?
Well, I mean, at this point, any sort of change in direction in terms of investing in American manufacturing, right? Investing in the companies who've committed to make things here and making sure those investments result in not just numbers of jobs, but good jobs. Any reversal of that feels like it would be terribly irresponsible. And so, you know, we've certainly seen, again, the growth that we've seen steadily over this administration does not happen by accident. And the reversal of decades-long trends that have not been good for working people also cannot happen overnight. So my hope is that we are handing off the strongest economy in the world right now, and the work remains unfinished, and that commitment to workers, we hope, will continue too, so those manufacturing jobs can continue to come back. And we've seen 2 years of very strong growth in construction. That's non-residential construction. A lot of that is because of the president's infrastructure promises that we've been delivering on. And you got to build the factories before you can employ people in them.
The acting and now outgoing acting Labor Secretary Julie Su in conversation with our colleagues Katie Greifeld and Shonali Bosick earlier today on this Jobs Day, touching on what, yes, is a softer portion of this labor market, the manufacturing sector, obviously, Joe, under more pressure than others, and yet by and large, it looks like a labor market that's in pretty good shape as a new administration gets ready to come in. Not just the 256,000 on payrolls, but an unemployment rate that went down to 4.1%.
Yeah, it's obviously this has been a difficult time for forecasting all the way around, and it's an opportunity to spend some time with Ben Harris, who is with us at the desk here in Washington, Vice President, Director, Economic Studies Program at Brookings, former Assistant Secretary of the Treasury for Economic Policy. Welcome back. It's great to see you. Happy Jobs Day.
Happy Jobs Day. At
least we're not outside shivering with Julie Su here.
Exactly.
People were so far off on this. I will say Anna Wong had the highest number in the consensus at Bloomberg Economics. How come we can't get close to these? It's not just this month where we're just far off the mark in the market.
Yeah, so when we're talking about payrolls, I think one of the things that makes it so difficult is immigration. And research coming out of Brookings showed that when we're getting these really high payroll prints at the beginning part of the recovery, one of the reasons why we could see such high prints was because we had so many people coming into the country, both seeking asylum and through illegal means. And so I think it really complicates things. I mean, it could mean we'll see an extra 100,000 jobs in a month that we just didn't anticipate. Yeah, sure. On the household side, so for the unemployment rate, that's just a story of non-response. And you saw this coming out of Governor Bowman's comments from the other day where she said, look, we just can't rely on the U3 like we used to. And this is true of surveys across the spectrum, whether we're talking about the survey of consumer finances coming out of the Fed or we're talking about consumer confidence. People just don't answer surveys the way they used to. And I think that makes forecasting that much more difficult.
Okay, so forecasting is tough, but then you get the data and it paints a story for those who have to make decisions around it, like the Federal Reserve. The market today is reading this data as a sign that this is not an economy that needs the Fed to ease policy, as they have been doing. Some on the street are suggesting no cuts this year. Perhaps a hike could be back on the table. How do you see it, Ben?
Yeah, so the way that markets seem to be looking at this is that we will be in a period of an elongated pause, and the Fed will need some sort of drastic data print to push us off that. So you either need to see something happen on the inflation side to get us back into the hiking cycle, or potentially, we'll need to see several prints of weakness in order to see cuts that might materialize. Right now, I think markets are expecting cuts either in the summer or potentially in the early fall in the September meeting. But for right now, it feels like we're in an elongated pause.
Well, of course, there are a lot of folks who will tell you there's a big tank of gasoline that Donald Trump's about to pour on that fire, and that reinflation will be the buzzword next year after Trump tax cuts are extended, tariffs are implemented, deficits explode. Where are you on that?
Yeah, I mean, I would describe this economy as the don't mess it up economy. And it was similar to the last time. I mean, Trump came into office. The unemployment rate had been falling. It was 4.7% when he was inaugurated, but had been falling for years. The economy right now is even better than it was then. So you've got household balance sheets are really strong. Debt relative to disposable income is really low. There is some bad news as far as transitions into delinquencies on credit cards. But you really have to squint in order to find any sort of story which suggests that the U.S. consumer is going to slow down anytime soon. And then you're seeing nearly a perfect labor market. I mean, we're seeing real wage gains. You've got plenty of jobs. You didn't have that type of imbalance like you saw in 2020 when they're just, we're just so many openings per worker. So we have this really strong, healthy labor market. And that means, my advice, not that Trump's asking for it, but it's like, just don't mess this up. And so there's real concerns around tariff policy. There's real concerns around over-borrowing through a reconciliation bill. And I think there's real concerns about being too strict on immigration policy and possibly seeing net out migration, which is something we haven't seen in my lifetime.
Well, so as we consider this notion that maybe everything is just right and we're kind of in this Goldilocks phase right now, it doesn't seem, though, Trump necessarily agrees with that. He had a press conference in Mar-a-Lago earlier this week in which he said interest rates are far too high. And we actually asked the former House Financial Services Committee Chairman, Patrick McHenry, about that on this program earlier this week. This is what he told us.
Mean tweets, that does not make monetary policy. And the Board of Governors at the Federal Reserve have long terms as Congress designed so they can have this longer term view. And I think Jay Powell's done a fabulous job as chair of the Fed. But this president will speak his mind publicly where other presidents privately complained. And that is a big distinction between now and what was then.
So when we consider that distinction and this question of the independent operation of monetary policy setting in the United States for the Fed, what would it mean if the data is suggesting the Fed can stand pat, but the president of the United States is saying, no, interest rates need to go lower?
Well, this has been in my mind in part because you saw President Carter's funeral yesterday and thinking about some of the lessons that came out of that administration. Volcker. I mean, so one of the lessons that came out with, look, if you want to fight inflation, the first, second, and third best thing to do is to appoint a credible Fed chair and let that chair do their job. And so, I think that a lot of people do worry about Fed independence under this administration, but that's something we will probably not have to worry about until the middle part of 2026 when Powell's term is up. When you look at the names of possible people who would be considered for Fed chair, they are all credible people like Kevin Hassett and Kevin Warsh and Mark Summerlin and people, Larry Lindsey, some of them have political backgrounds, but all credible people. And so, obviously, Donald Trump doesn't want to repeat some of the sins of the 1970s, the early part of the decade before Volcker.
Nor does the Fed.
Nor does the Fed. My sense is that you have to look at what Donald Trump does, not so much what he says. Whether you're talking about a trade war, or you're talking about a corporate tax cut. I mean, sometimes his bark is much worse than the fight.
This is the seriously and literally thing.
Oh, yes, I've heard that before. Well, you said, you said something important. You referred to immigration, and we're still trying to get a sense of how serious or literal Donald Trump is about mass deportation. Let's say we close the border. Let's say this mass deportation takes place. Caps are not lifted on H-1Bs. Where's the job market?
Yeah, so one thing that I realized coming out of research out of Brookings was that you don't have to have this oppressive deportation scheme in order to get net out migration. So you can do other things, right? So you can put more agents at the border. You can transition people who are here legally into illegal status. They're going to leave. The rhetoric, I think, has a chilling effect. And you could have people who are here legally who decide they want to leave because this is no longer a hospitable place to legal immigrants. And so pretty quickly, even without these mass deportation programs, you can get to net out migration, a shrinking of the labor force, which might precipitate something which we thought we might see in the last administration but didn't, which is a wage price spiral. And so if we get to the point where the labor market is so tight that you start to anticipate future tightness down the road, companies start giving raises prematurely, consumers start buying in anticipation of, then that's something which we haven't dealt with in a long time. And that possibly coupled with a non-credible Fed, or a Fed which is seen as being political, could be terrible news for inflation.
I want to talk about something else regarding the incoming administration and those affiliated with it that has been in the news this week. Elon Musk talking about the Department of Government Efficiency, maybe pulling back expectations a little bit. Maybe it's not going to be $2 trillion in spending cuts, but if they aim for $2, they could get $1 trillion. Even if we assume that level is achievable, $1 trillion is not an inconsequential amount of money. When they're talking about pulling back the scope and scale of the federal government, what would that actually do economically if that drastic kind of cut is implemented?
Well, it depends on the nature of the cuts. And my guess is that based on the type of cuts they're considering, which is non-defense discretionary spending, which is a pretty small share of the overall federal budget, these are the type of things that, A, tend to make us a richer country. So investments in education, R&D, science spending, cancer research that improves health. I think that that's more or less just a hit on our national prosperity down the road. If they're talking about cuts to Medicare, to Social Security, that has serious implications for the well-being of retired households, but less so for the future prosperity of our country.
This was the final jobs report while Joe Biden is in office. What should Donald Trump prepare for in the early phases of his administration? We'll get, I guess, what would technically be Joe Biden's last jobs report or partial month while he's in office. How do you come off data like this?
Well, I mean, you're handed a terrific economy, and I would just encourage those who are in policymaking positions to move slowly. When it comes to tariff policy, I looked to the last administration, the last Trump administration, where the average tariff rate went up about 150 basis points. It was not a trade war. It was a trade war with China. So the average tariff on Chinese imports went from 3% up to 11%. So certainly consequential for China. But if you're talking about goods that came from anywhere but China, the tariff movements were almost zero. And so my hope is that he doesn't come in too strong with changes in our trade policy. My hope is that they are as worried about the deficit as many economists are, and you don't see big increases in issuance coming out of a reconciliation package. I think right now markets are expecting around $5 trillion in new borrowing. If you came in with $7 trillion, I think that would roil financial markets. We're like, we have to step back, take a pause. We don't know what to do with all this new issuance. So I would say move slowly, honor the terrific state of the economy, and realize that all this rhetoric necessarily isn't a good thing for business conditions, isn't a good thing for American households, and maybe dial it back a bit.
Donald Trump's always watching, so he'll get to
Yeah, he definitely cares about it.
Ben Harris, thank you so much. It's great to see you. Let's compare notes in a couple of weeks. We do have headlines from the White House. Kaylee, as Joe Biden is briefed on the wildfires in California. FEMA turning on its critical needs assistance program, and they are making some progress on containment in the last 24 hours. We'll have more ahead here on Balance of Power on Bloomberg.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. U.S. Supreme Court justices are signaling they may uphold a law banning TikTok in the United States if it's not sold by its Chinese parent company by January 19th. The justices suggested national security concerns outweigh free speech interests. Among U.S.-based social media names, Meta Platforms right now up 2.4%. Shares of Snap Inc. up now by just about 6.5%. Stocks lower, getting hammered today. Bond yields climbing alongside the dollar. Traders are slashing their bets for Fed rate cuts this year after this morning's blowout jobs report. S&P down 72, down 1.2%. The Dow down 546, down 1.4%. NASDAQ down 1.3%. The Russell 2000 index of small cap shares down now by 2.3%. We are off session lows. 10-year 4.76% with the 2-year 4.36%. The 30-year did briefly touch 5%. Spot gold up $22 the ounce, up 0.9%. West Texas Intermediate crude up 3%. And Bitcoin now at 95,229. Bitcoin up by just about 3.4%. Earnings news, Delta Airlines up by 9.4%. Also out with earnings this morning, we had shares of Walgreens Boots Alliance up 28% after earnings, and Constellation Brands after earnings also advancing now. Right now, Constellation lower, Constellation down by 16.7%. Recapping, S&P up by 1.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York with the latest on financial markets. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, where we also want to bring you the latest on what's happening with the ongoing fires in California, which, according to the governor, Gavin Newsom, have now claimed at least 10 lives. They say that death count is likely to grow, and more than 10,000 structures have been lost so far, but these blazes are still raging. While the president, Joe Biden, while receiving a briefing in the Oval Office today, did note that there has been some progress on containment. I believe we're at 8% containment now on the Palisades fire specifically. He also did point to the fact that the loss of life is likely to increase, and was asked by reporters after that Oval Office briefing how he is coordinating with the incoming administration that, of course, will be here in just 10 days. He says they know every single thing about the response, and kind of pushed it to them when asked about having to seek supplemental funding from Congress. He said, whether I'm going to be here, there's just 10 days left. We're briefing the incoming administration on what they're going to have to do, which very well could be to ask for billions of dollars, if not tens of billions of dollars from lawmakers.
Yeah, that'll be a big part of the conversation once they get a hold of damages here. We have heard from lawmakers that we are not close to that point yet, but think of the numbers you just mentioned. 10,000 structures, 29,000 acres, 150,000 people still under evacuation orders in California. If you're with us on Bloomberg TV or on YouTube, we were just showing you a live look at the Oval Office, Joe Biden being briefed on this as Kaylee is referring to the comments coming out of that meeting. If you're with us on the radio, we've got the president sitting behind the Resolute desk. This is really something, Kaylee, looking at a Zoom screen, essentially, with officials who are briefing him from California on the situation that we're just now describing.
Well, and the vice president, Kamala Harris, also in attendance, as she was in the briefing yesterday. Her own home in California was subject to evacuation orders. So obviously this is personal for her in a much different way beyond just her governing duties as vice president.
Absolutely. President Biden saying that FEMA has turned on its critical needs assistant program. We'll have a lot more on this as J.P. Morgan now estimates insured losses in excess of $20 billion. That will be a major second leg in this story once we get things under control. Thanks for being with us here. It's Friday on the fastest show in politics. This is Balance of Power, and I'm Joe Matthew alongside Kaylee Lyons. In Washington, we have our signature panel with us. Kaylee, with a lot more to talk about here. It's all on to Mar-a-Lago this weekend. Are you going to Florida?
Did not get the invite,
warm weather. No,
but like half the House of Representatives did, apparently.
That's
at least
for
the
sure.
Republican conference.
The Republican conference is going, along with one Democrat by the name of John Fetterman, who is reaching across the aisle here. He says he wants to be the next Pope of Greenland. We can save the comedy for our signature panel. They're with us here, Rick Davis and Jeannie Shanzano. He is Republican strategist and partner at Stonecourt Capital. Jeannie is our Democratic analyst, of course, political science professor at Iona University and senior democracy fellow with the Center for the Study of the Presidency and Congress. I'm compelled by this John Fetterman situation here, Jeannie. I mean, it was actually news that the Republican Main Street Partnership would have representatives at Mar-a-Lago. They're coming from the center, they're coming from the right, and we've got a Democrat from Pennsylvania there. What's he doing?
Yeah, I think it makes sense. He's gotten some criticism, as you can imagine, from the left for going, but he has said, look, this is the incoming president of the United States. I am from a 50-50 state. It is incumbent on me to open these conversations and continue them. And this is sort of a really interesting trajectory of Fetterman. You know, he was often seen initially as a real progressive lightning rod and attacked, but since I pay attention to conservative media over the last year or so, he's become really something of a darling of the conservative media. He was the first senator the other day to support, first Democrat, I should say, senator, to support the Lincoln-Riley Act, which pertains to border security. So I think he is really making a name for himself and trying to lead the way to work with Donald Trump and the Republicans when they can on issues they agree on. And certainly for John Fetterman, there's a lot from Israel and the border to the economy. So I think it makes sense.
Well, it makes me wonder, Rick, if we're going to be having to watch the way John Fetterman votes in the confirmation votes for Trump's nominees. Is he going to be the one Democrat potentially that crosses the line on some of the more controversial ones?
I don't know about the more controversial ones, but he has said publicly, I will vote for Donald Trump nominees to be confirmed. And, you know, the proviso to that is obviously, you know, pending background checks and things like that. But at the end of the day, I think he is opening up this session of the Senate, basically saying, I'm here to cooperate and get stuff done. Tired of the politics of the past, the division, the partisanship, and let's get something going on here that can change. Now, what I think is really interesting is here's a guy, John Fetterman, who's going down to Mar-a-Lago to basically preach bipartisanship. And there is not a clear leader of the Democratic Party who will be the loyal opposition at this point to Donald Trump. I mean, you've just had a presidential campaign, and the Democratic Party seems completely without a rudder to say, we're not for what he's trying to accomplish. And that is just from a purely political point of view, a real missing element to this Democratic Party.
You know, we talk about bipartisanship a lot around here. Jeannie, is John Fetterman the smartest politician in Washington? Look at this tweet he just put up here with his Republican counterpart in the Senate, Pennsylvania, David McCormick. He's retweeting McCormick here, and he writes, 2 dudes, 2 better halves, bipartisanship, 67 counties, a stronger Pennsylvania. They went out to dinner together. I don't know, they're at some diner or something here, which really shouldn't be
with the
news.
wives.
Jeannie, with the wives, yes. Look at this. Look at the smiles. Does he have something figured out?
They do. And I'm so glad you raised that tweet because, again, he got so much flack for going and eating and sitting with, you know, Dave McCormick and his wife and Fetterman and his wife. But I think he is onto something. The reality is Pennsylvania is a big, complicated state. It's a 50-50 state. And to Fetterman and McCormick's points, they represent the entire state. And so I think it's incumbent on him to work with Dave McCormick and, you know, try to do what's best for Pennsylvania and the country. The other part of this is I agree with them on bringing civility back to Washington. We need people to bring civility back. And a few weeks ago, Fetterman, I think he was talking on ABC, he said, look, I'm not rooting against Donald Trump. I want what's best for my state and for the country. And I think that's approach we hope all Americans and certainly our representatives in Congress take. To Rick's point, and it's a good one, Democrats also have to pick and choose their battles, and they do need somebody to stand up when Donald Trump is doing something, or the Republicans are, that's against the interest of the lower middle class, and to say so and to, you know, represent the opposition. And they're going to have to find their way to do that because they don't have a lot of leadership there, although they do have Hakeem Jeffries and they have Chuck Schumer.
Well, Joe, as Jeannie talks about civility in Washington, we arguably saw that on display yesterday when the state funeral services for former President Jimmy Carter were held at the National Cathedral, and all 5 living presidents were in attendance, sitting in pews together, talking, maybe even laughing together in the case of Donald Trump and Barack Obama. And Donald Trump actually spoke about that interaction last night.
It did look very friendly, I must say. I didn't realize it. I didn't realize it, how friendly it looked. I saw it on your wonderful network just a little while ago before I came in, and I said, boy, they look like 2 people that like each other, and we probably do. We have little different philosophies, right? But we probably do. I don't know, we just got along, but I got along with just about everybody on that. We met backstage, as you know, before we went on, and I thought it was a beautiful service, but we all got along very well, which is good.
They probably do like each other, Rick Davis. You buy that, or was this a one-day only thing?
Oh, you're going to need experts much more capable than I to determine whether or not Barack Obama and Donald Trump like each other. That being said, I mean, it is a celebration of our institutions when you can have these former presidents in a pew together and a fight doesn't break out right after an election. Kudos to Jimmy Carter for bringing these people all together. And maybe that does usher in an era of good feeling. I mean, this point about Fetterman, up until this election, we only had 5 states with split delegations in the United States Senate, where there was 1 Republican and 1 Democrat. We live in a hyper-partisan, divided country, and all of a sudden, we start to see a little movement toward the center, even amongst Republicans. Which may be a good reason to have them all down to Florida for a cold weekend in Washington.
That's right. I don't know, Jeannie, your take on this. By the way, I'm not sure there's a stage in the National Cathedral that would justify a backstage. It wasn't a show. It was a funeral yesterday. But nonetheless, I'd love to know, by the way, what Donald Trump and Mike Pence said to each other when they shook hands. But what do you think? Is he getting soft in his age, or is this the mainstreaming of Donald Trump, or what's happening?
Yeah, I wouldn't say he's getting soft, but you guys know I love the New York Post. Cheers to the New York Post. And they had a lip reader there. And the lip reader had some very interesting things to say that Obama and Trump were talking about. Apparently, he said, we need to find a quiet place later in the day to discuss a matter of importance. So who knows what they were discussing? There was sort of speculation. It was like an international agreement. So, remember like the lip readers, the body language folks that come on? I love them. Yeah. So who knows what they were discussing? But, the reality is that there was an interaction with Donald Trump, to your point, and Mike Pence, but Karen Pence, not so much. Yeah. And who can blame her after January 6th? So a lot of intrigue in the personal space there. And I thought it was fascinating.
Yeah, no handshake offered by the former second lady.
Oh, that's correct.
She was
or a smile.
Yeah, not down for that yesterday. Jeannie Shanzano and Rick Davis, our signature political panel. Thanks as always for joining us. Of course, they'll be back for more in the late edition of Balance of Power coming up at 5 p.m. But before we go in this early edition, we got to talk about TikTok. It was arguments heard at the Supreme Court today. Yeah. It doesn't seem the court's necessarily anti-ban at this point.
Donald Trump may not like the way this works out. We may not be blocking the talk. We'll find out next on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower. We're off session lows, but still a down day. Jobs Friday. The Dow, the S&P, NASDAQ, all in the red. Stocks are getting hammered. Bond yields are climbing. Traders slashing their bets for Fed rate cuts this year after that blowout jobs report. S&P right now down 1%. We've got the Dow down 1.1%. NASDAQ lower by 1.1%. Broad-based selling today with the Russell 2000 index of small cap shares down now by 2.1%. The 10-year 4.75%, the 2-year 4.37%. Briefly, the 30-year touched 5%. Gold up 0.8%, $26.87 the ounce. West Texas Intermediate crude up 3.2%, $76.28 a barrel. And Bitcoin up almost 3% right now, $94,795 on Bitcoin. U.S. Supreme Court justices signaled they may uphold a law banning TikTok in the U.S. if it is not sold by its Chinese parent company by January 19th. Among U.S.-based social media stocks, Meta Platforms up by 3%, Snap Inc. now up by 7.8%. And Donald Trump, the first former U.S. president convicted of a felony, sentenced by a New York judge today to no jail or probation for his hush money case. Recapping, S&P down 60, down now by 1% for on-demand news 24 hours a day. Subscribe to Bloomberg News now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Hey, Charlie, thank you so much. Watching Wall Street for us as we talk politics in Washington. But Charlie just put his finger on one of our top stories. And, of course, that today is the sentencing of no jail time for Donald Trump. This is the hush money case, Kaylee, the Stormy Daniels case in New York. He had asked the Supreme Court to intervene, and no such luck. Even Amy Coney Barrett took a pass on that. So he was, in fact, in a sentencing hearing virtually. And we heard from the president-elect, at least in audio form. Listen.
This has been a very terrible experience. I think it's been a tremendous setback for New York and the New York court system. This was a case that Alvin Bragg did not want to bring. He thought it was, from what I read and from what I hear, inappropriately handled before he got there.
But of course, the case was brought, it was tried, and a jury in New York did find Donald Trump guilty of these 34 crimes. He was convicted, but as Joe mentioned, won't really face punishment for that conviction. No jail time, no probation, and unconditional discharge is what he received. So for more, let's go to June Grosso, host of Bloomberg Law, here with us on Balance of Power. June, given that this really is not consequence at all necessarily, no real punishment here for Donald Trump, what is the important thing about this? Is it just that he will now take the oath of office 10 days from now as a convicted felon?
Well, I mean, that's the main thing on his side. On the judge's side, he said that all the protections that a president gets can't erase a jury verdict. So I think that was the important thing for the justice system, that the jury verdict stands and is honored. Donald Trump, what he was trying to avoid, he knew that he wasn't going to get any prison time, but yet in the last few weeks there have been furious legal motions, even as you mentioned, to the Supreme Court, because he wanted to avoid the stigma of being the only president, the only U.S. president in office as a convicted felon. And so that was what he was trying to avoid, and now that's happened to him. There also is one thing, is that he won't be able to vote as a felon in Florida, although people I've talked to have said that they think that the governor will make some exceptions for him.
Well, so we're done here, right? I mean,
we're not done.
We could see a special counsel report that may or may not be released with regard to this case. Does anybody come back around in 4 years? Donald Trump is now in the clear.
Well, see, what the Supreme Court said was take up all your evidentiary issues at appeal, where normally the normal defendant would get sentenced and appeal and then might go to the Supreme Court if they had enough money to do that. But So now we're going to go through with the appeal. He has 30 days to appeal. You know he's going to appeal because he's appealed everything else, and he mentioned that he was going to appeal the night before. Last night, things have been happening so fast, I'm trying to keep track. Last night at Mar-a-Lago, when he made some statements, he mentioned that he was going to appeal. And they do have some appellate issues based on presidential immunity. So that might take years to get through the court systems, and I think we'll end up at the Supreme Court. Again. Still.
Well, busy justices they are, and they certainly were today, June, where this morning they heard arguments in the TikTok case. It's really fundamentally a case about national security and how it stacks up against the right to free speech in the United States. Our reporting and analysis signals that the justices do seem open to keeping this ban that is set to go into effect on January 19th. Allowing it to go into effect. But how did you read the arguments?
So when you say national security, the courts seem to freeze national security. And when a president says something is national security, a risk, then, and Congress does, then the courts think that that's the most important thing. It has precedence over anything else, including, it seems like, from these oral arguments today, free speech concerns. And you have to remember something, the Congress, no one has really sort of set out what are the national security concerns here. What has TikTok done that would give pause? It's sort of like the Nippon Steel, U.S. Steel ban, where Biden said it's national security concerns, but no one says what are those concerns. And apparently there is a secret record that Congress has only seen, but the public hasn't seen it, and the public is going to be very, very annoyed. A lot of the public, if that date comes and the ban goes into effect. And so from the Supreme Court, one thing that they did say, it was discussed, could they possibly put this off, give it a stay of the law until Donald Trump takes office, because he filed a brief with the court, not mentioning any constitutional issues, but just mentioning his deal prowess and how he'd be the only one who'd be able to put this all together and solve it. So, that is a possibility. Perhaps the court will put it off, but they certainly seem to think that the national security concerns overrode everything else. And they didn't, the lawyers for TikTok and the lawyers for the creators of the programs on the app didn't seem to get much play for their arguments.
June, it's good to see you. Thank you so much. June Grasso, Bloomberg Law. Of course, as we want to add another voice of experience to this conversation, Sarah Olam, Senior Fellow at the Technology Policy Institute. Sarah, welcome to Bloomberg TV and Radio. What do you think here? Do national security concerns override the First Amendment in this case?
Well, we have to go back and look at the law that was passed and signed by President Biden. It went through the House and it passed 360 votes to 58 in March. It passed the Senate 79 votes to 18 in April. And then it was signed in April 24th, 2024. So, in the record, Congress is concerned about the corporate ownership of TikTok by ByteDance. And they have concerns about the data collection operations and label China as a foreign adversary. And so that is the posture that we're looking at with this deadline that's coming up January 19th. What's interesting, though, is that President Trump, he started all of this with executive orders in 2019. So this conversation about TikTok has been ongoing for 5 years now. CFIUS, the Committee on Foreign Investment, had a finding in 2020. They've been trying to go through risk mitigation and plans for monitoring by Oracle. And so there's been a lot of back and forth. But really what happened was Congress passed a law, the president signed it. And so now the Supreme Court is in this position where they're being asked to maybe extend the deadline from January 19th, or as the DOJ asked them to let it go through to January 19th and see what happens if ByteDance will divest.
Yeah, and we'll have to wait for a ruling on that, which presumably could come any time in the next 9 days, since that's the deadline we're up against here. Sarah, it does seem, though, that this really does just come down to the question of ownership specifically, that it doesn't necessarily matter what is being propagated or posted on TikTok or by who. It only matters where ultimately the ownership lies. Is that a correct way of reading this? And that's the out that Congress gave TikTok, right? Just change the ownership. Make sure that it doesn't lead back to China.
Well, what was really interesting was I listened to the oral arguments this morning. They went on from 10 a.m. to 12:30, so right before this time. And it was very interesting to hear the 9 justices talk with the solicitors about these questions. And so they kept trying to separate the content free speech concerns from the ownership concerns. But there is a chicken and egg issue here where you have a corporate parent that is related to a nation state that has control over the algorithms that implicate content. There was discussion, though, about how in the law, it doesn't seem to, and Congress doesn't seem to be concerned about the dance videos, the cat videos, just so long as the ownership is by a different type of entity. So the justices, they picked apart the different arguments, asking hypotheticals. What if this statute didn't have anything to do with speech? What if it was just ownership? And they did address questions of what level of scrutiny to apply by looking at the First Amendment questions. Is it strict scrutiny? Is it intermediate scrutiny? So what's going to be interesting is to see how they decide their place in the separation of powers. So they've been asked to come in and even be between the future president, who will be installed January 20th. And like the reporter before me said, he did file an amicus brief in this case asking for a stay, saying that the deadline is a bit arbitrary and that it happens to be right before the change of administration. And so there could be some wiggle room there to say, and the statute includes a 90-day extension for certain circumstances. So there are some reasons that the court might say, we don't want to make an emergency decision here. We'll let things sort out by giving an extension of time.
So that answers my next question, which is what's more likely, an extension on this deadline or an imminent ruling? The court's going to need to take some more time, right? They have to question DOJ officials. What are you going to be watching in the days ahead?
Right. Well, they did ask questions about, can the president not enforce the law? And so the president is the one who enforces the deadline. But if it is law, TikTok and its partners, so they were saying all the cloud providers and contracted partners, if the law is in effect January 19th, they can't provide the services that they currently are. So you would see a blackout on the app. And there was discussion about analogs to broadcast TV and communications law. We've seen blackouts for sports and different contracting. So it's not unprecedented that there could be a blackout. It would be it would make 170 million people confused, but this is where we are.
And just quickly, Sarah, as we're having this conversation around free speech and First Amendment rights as it pertains to TikTok, it obviously goes well beyond that. Meta, we learned this week, is pulling back on fact-checking, saying that there's kind of a new political reality with this incoming administration. How do you think widely across technology the approach to these free speech issues and questions of censorship is going to change in the next 4 years?
Well, I think it's very interesting that we're in a time where user-generated content is growing in volume. People are used to being able to express themselves. There are AI bots that are automated that are pushing out more content. And so really, this case is a good kind of microcosm of where we are in technology. Meta is trying to promote, more speech on its platform. And there is a competition with Chinese companies. So in the next 5 years or so, you're going to see more competition between US companies and Chinese companies. And but then there's also a lot of cross commerce. So TikTok wants to operate in the US, and our companies want to be in China. And so there is that interplay and also competition.
And therein lies the rub. Sarah Olam, Senior Fellow at the Technology Policy Institute, joining us on Balance of Power here on Bloomberg TV and radio. Thank you so much. I would point out, Joe, as it's looking not that great for TikTok in the Supreme Court, Meta is a beneficiary of that today on a down day for financial markets. Up 3% in this Friday trade.
It's about as good as it's looked all session as well. This could be good news for Mark Zuckerberg. We'll find out. That's part of the motivations. You're right. They're friends now. Again.
Yeah.
Donald Trump and Zuckerberg. They're warming up to each other again.
Probably.
As we shall once more at 5 p.m. Eastern Time, warm up with us on Balance of Power, the late edition. I'll be back with Kaylee then on Bloomberg.
This is Bloomberg Business Week, insight from the reporters and editors that bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser. and Tim Stenivek on Bloomberg Radio and Television.
And a very good afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week for, yes, TGIF. It's Friday, January 10th. It's not only a Friday, it's a Jobs Friday. And, man, an interesting report. Kind of, again, one of those days where good news is bad news in terms of expectations about what the Fed's going to do. We saw rates move up, but we also got to read in terms of consumer sentiment on inflation expectations, and that's a big factor, too.
Yeah, huge moves in the bond market, huge moves in the equity market. We're off our worst levels of the day in equities, but still down close to a percentage point on the NASDAQ Composite, 0.9% to the downside on the S&P 500. We got a great roundtable, Carol, coming up in just a few minutes. Michael McKee and Michael McKenzie on rates and the economy.
It's the mics and all of that in just a moment. Plus the latest on the LA wildfires, including Airbnb's efforts, what they are doing to help those who have lost their homes. We're going to check into that a little bit later on this hour.
And Stuart Eisenstadt, former President Jimmy Carter's chief domestic policy advisor, also former ambassador to the EU. He joins us to talk about the 39th U.S. president. And also, we're going to get his thoughts on today's U.S. geopolitical environment and challenges.
There are a few. First up, though, to the trade and your top business stories. Here is Charlie Pellet.
Very much. Jobs Friday indeed. Stocks getting hammered. Bond yields climbing right to the numbers. Yes, as Tim mentioned, we are off session lows, with the S&P now down 53, 58.64 where we stand right now. We have got the S&P down 0.9%. Dow Industrials down 472, decline there of 1.1%. NASDAQ lower by 1%. Broad-based selling with the Russell 2000 index particularly hard hit, down 2.1%. 10-year 4.76%. The 2-year 4.37%, and the 30 briefly touched 5% this morning, 4.95% on the 30-year. Spot gold up $18 the ounce, up 0.7%. West Texas Intermediate crude now up 3.5%, 76.48 a barrel, and Bitcoin advancing almost 3%, 94,778. U.S. Supreme Court justices have signaled they may uphold a law banning TikTok in the U.S. if it is not sold by its Chinese parent company by January 9th. Among U.S.-based social media names, we do have shares of Meta Platforms up now by 2.7%, Snap Inc. up by 7.4%. Sources tell Bloomberg the Ultimate Fighting Championship is looking to get more than $1 billion a year from its next media rights deal, more than double what the current contract holder ESPN pays. Shares of the Walt Disney Company right now trading lower by 0.5%, and TKO shares, they are up by just about 0.5%. Constellation Energy is buying closely held Calpine for $16.4 billion. And Donald Trump, the first former U.S. president convicted of a felony, sentenced by a New York judge to no jail or probation for his hush money case. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. That's a look at the Friday market trade. Let's get to it. As we keep saying, stocks initially getting a bit hammered, bond yields jumping, with traders slashing their bets for Fed rate cuts this year after data showed a solid jobs market and an increase in consumer inflation expectations. So let's dig into all of it. Our roundtable, Bloomberg News international economics and policy correspondent Michael McKee to my left, and to our right is Bloomberg News rates reporter Michael McKenzie. Michael McKee, let's start with you first. I want to ask you about today's jobs and UMich sentiment numbers. Laid out for us and what it says about the U.S. economy.
I always love Jobs Day because Carol bakes cookies and, you know.
No, I don't.
I didn't get any cookies today.
Tim decorates the tree.
It's once a month now.
You must be thinking of a different holiday.
Payrolls were obviously very strong. We have to take it with a little bit of a grain of salt because there's probably some hurricane and strike catch up in that. And also we had the very late Black Friday, which appears to have delayed the hiring of retail employees because we saw a 27,000 decline in retail in November, when normally you'd expect all those people to come on. And we saw 43,000 additional people hired for retailers in December, and also 47,000 hired in the category that includes basically the delivery drivers, the UPS and FedEx people who are bringing you all those packages.
The dudes who deliver it before the porch bandits steal it from my, or pirates, excuse me.
There was good news in there, but there may be some payback next week, or next month rather. But the good news for the Fed is that the unemployment rate went down. Massive increase in the household survey in terms of people hired after a big decrease the month before, and everybody said, oh, labor market's falling apart. And it's not. That's the bottom line here, which can keep the Fed on the sidelines, which will bring Mike McKenzie in to explain all the joy that was found in the bond market.
I was listening to, I think, Tim, we're all listening to surveillance this morning when the numbers passed, and it was like, I mean, man, the market reaction was pretty swift, Michael.
Indeed it was. This has been a really tough week for the bond market.
It has,
in
right?
fact, what was interesting about today was longer dated bonds have been selling off the most for much of this week.
Mm-hmm.
Today is all about the front end because the market's saying, oh, the Fed is really going to go on an extended pause now. We've pushed out the first rate cut for this year from around June. Now we're flirting with the September-October timeframe.
It's amazing.
Bank of America come out today and say, no, we don't see any more rate cuts now for the cycle. Goldman, Citi pushing it back. So the real problem now is that you've got a series of forces all combining to really hurt bonds because there's no really place here nowhere here to hide really, because the front end is going to get whacked because if the economy keeps trundling along at this kind of pace, and you've also got that uncertainty coming from the Trump administration coming in, who they want to keep the economy going. The Fed is also going to have to look at inflation a lot more closely now, and we've got a really important inflation report coming out next Wednesday. So everything's pushing us towards a world where the Fed is basically done. The December expectations for rates, where the Fed rate will be, is now above 4%. So 4% is now your floor. And that means the longer end is still going to sell off. It hasn't sold off as much today, but it sold off a lot this week. And we did test 5% on the 30-year. The 20-year bond is already above 5%. 10s went above 4.75, where everyone had been saying, oh, that's going to be where the buyers turn up. We're not really seeing it.
So 476 on the 10-year right now. Yeah.
So does that mean we get to 5%? Are folks that you talked to, Michael McKenzie, saying we could see 5% on?
Yes, I think you've got a pretty good chance of that. We'll see. I mean, inflation next week is expected to show the third consecutive monthly rise in the headline rate. So we're not trending in the right way. And then Scott Bessent's going to sit down for the Senate confirmation hearing on Thursday, and everyone in the bond market wants to hear what he's going to say about what's happening in terms of fiscal policy. How do you square this incoming administration's efforts to keep on spending, bring in tax cuts, with being fiscally disciplined? And that's what's got people worried as well.
But you guys keep reminding, both of you do that. Listen, there's a lot that happens, from Fed meeting to Fed meeting, whether it's more reads on inflation, more reads on jobs, and then we'll see, Mike, in reality, what we get out of this administration that ultimately might impact things.
Yeah, when Michael was talking, I was...
Like, we're all data dependent.
I was thinking, you want to pat the bond traders on the head and go, you guys are so cute. I mean, changing your views like this, and we all know in a couple of weeks, it'll all change again because... yes, CPI is very important next week, but after that, the big one is Inauguration Day and the 100 executive orders he's going to put out, and then whatever plans they go through. I think the only safe bet is that we don't know what the Fed is going to be doing this year, and the Fed doesn't know either, and they're very happy to go sit in the shade and wait this out for a little bit because they don't want to be on the wrong side, slow the economy or goose it too much, given what we don't know about what's going to happen.
So January 29th is the consensus, no move on the 29th, and the idea is the consensus is maybe the next move comes all the way in the fall, late summer?
Well, the consensus for January, you look at the WIRP page, and I think it's written down there, we'd be gobsmacked if the...
Let's see, WIRP.
If the Fed moved rates...
Oh, it does say that, yeah.
29th. But after that, who knows? I mean, by March, first of all, we've got the debt ceiling hanging over everybody's head. We're going to have the government has to be funded by March.
Right.
And so
that little thing.
Just those two little things alone, let alone any new policies to throw people out of the country or impose tariffs or things like that.
I want to throw two things into it. First of all, isn't it great that the job market's doing well and this growth is happening?
Yeah.
So where's that aspect of it? The other thing is, and I heard this on surveillance this morning, like, what is really behind the growth in rates? Is it inflation? Is it that the economy is growing? Like, do we really know what is truly behind the move up in rates?
It's a combination of factors, but clearly if you look at term premium measures from the New York Fed model, it's risen a lot. I mean, it was barely above zero a month ago. It's now above 60 basis points. So it's moved a lot. And that tells you that investors are going to demand a higher premium to own longer dated debt.
Right.
You've then got the front end of the curve where everybody was really telling me for the last month, oh, just stay in the 2-year. That's going to be fine because the Fed's still going to cut this year. Well, now that's now kind of in question. And in fact, we now have a situation that's quite rare. The 2-year yield is now above the Fed funds effective rate of 4.33. Now, before everyone say, oh, the Fed effective is a really tough level to break for the 2-year. Well, that's just been broken. So you're in an environment right now where there's a lot of uncertainty.
So is it uncertainty that's just moving rates up? Like, that's what I'm trying to get to. Do we really understand why we've seen this big move up?
Well, I think there's another element to this and if you talk to I was talking to Greg Peters at PGIM earlier this week, he says, we're just going back to where we were before the financial crisis. That's when real yields were above 2%. Inflation is running in a sort of 2.5–3% zip code, which means bond yields are going to be at 5%.
So back to normal.
That's kind of back to normal.
Back to the old normal.
The old normal.
Instead of the new normal. But what's funny is you look at the actual cost of borrowing, not the Fed funds rate because you're not a bank. But if you look at mortgage rates and if you look at credit card rates and you look at the prime rate for the best business borrowers, none of them have come down since the Fed cut rates 100 basis points. And yet the economy, as Mike said, is just still roaring along, which tells you, A, that the Fed's probably not restrictive enough, and B, that the neutral rate has clearly moved up at this point. Now, the Fed's big concern is how long does it stay up? Do we revert, or are we back at the old normal? And it stays that way.
Mike, when it comes to the estimate, economists, apart from our own Anna Wong here at Bloomberg Economics, they got this wrong in terms of the figure that we got this morning. Why is that so hard to get?
Well, there's a lot of moving parts in all of this, and then there's some groupthink too. And so people are looking at what's happened in the past and extrapolating that. Some people may have missed the change in the holiday and the seasonal effect of that. And it's been for months and months really hard to get a handle on what's happening with the labor market. Remember, it was only a couple of months ago that the labor market was so bad that we had to start cutting interest rates to save it. And now you've got this reversal. And does that last? Or is this just a quickie thing too?
Like, just to kind of wrap up here, though. So Michael, is that it? Like, we just have to think about folks. We're just going back to the way it maybe used to be, it should be.
I think you have to, because let's face it, so many people in this country have locked in very low mortgage costs. So even though the 30-year fix today is going to be above 7% when we get the new numbers next week, it doesn't really affect the majority of people. And as long as the job market stays tight, and potentially could even be tight if you start to see people being deported this year, if you don't lose your job and you've locked in really low borrowing rates, and look, a lot of companies did the same as well, and we still have all the fiscal stimulus from the Biden administration still flowing through the economy. So again, it's very hard to see what's going to knock this economy off course. The only silver lining for the bond market right now, and the only reason you'd be buying 10-year yields at these levels and 30s at 5% is that if you think there's going to be enough, we're moving into an environment where good economic news becomes bad news for the equity market, and you get a tumble in stocks, and you get a backup in credit. Then treasuries will probably show some haven support. But again, it's going to be interesting to see how that works, given, again, the U.S. fiscal position.
Mike, 20 seconds left here, though. I mean, is there enough growth out there in the U.S. economy to keep things going?
Appears to be that way now, and it looks like maybe only something that would come from the administration at this point, or some exogenous event, some war we didn't anticipate or something, would knock it off its pins at the moment.
All right, cookies and Christmas tree next time around. All right, guys, thank you so much. Bloomberg News international economics and policy correspondent Michael McKee, along with Bloomberg News rates reporter Michael McKenzie. Guys, thanks. Have a great weekend. We're going to stay with the U.S. labor market.
Yeah, and let's bring in Amy Glazer, Senior Vice President at the Human Resources and Staffing Company, Adecco, joining us from Florida. Amy, a strong U.S. jobs report from the government, especially in the areas of healthcare, retail, and leisure. What are you seeing, though, when it comes to hiring trends? What sectors? What types of jobs? What are you seeing?
Yeah, I think we're seeing the exact same thing here on the ground. Today's jobs report really provided a clear signal of the resilience in the labor market, and it did include those usual suspects you just mentioned: healthcare, Government, leisure, and hospitality. We did see the rebound in retail. I'm not sure if you all headed into the mall during the holidays, but it was evident there was a lot more hiring activity going on.
What about wages? I am also curious, about what you are hearing, seeing when it comes to employers. Do they have to pay up or do they have more leverage in today's labor environment?
For the first time really in the last 4 to 6 weeks, we're starting to hear some whispers about wages beginning to increase again. I think almost half the states had an increase in minimum wage going into 2025. We're in a bit of wait and see and keep an eye on it mentality to see if those whispers become a little bit stronger or if they just remain that. So I think only time will tell over the next couple of months. But if the market continues as strong as we're forecasting it to be, I could see an appetite for increases going into the first half of the year.
There are important regional differences when it comes to the U.S. jobs market and the hiring outlook for the next few months. I wonder how an event such as the devastating wildfires in California go into your calculations, or what you see in that market as a result of schools being closed, people not being able to get to work because they're evacuating or taking care of family members, or they've lost everything. How does an event such as this factor into your calculations and how you're thinking about the economy?
Without a doubt, there will be a short-term impact, not only with what's going on in California and the devastation there, but even with the cold blast we've had going on and all the ice and snow and closures going on. So in the short term, we'll definitely see an impact. However, in the long term, we'll see more jobs created as relief efforts continue, and we'll see some migration of job opportunities as well, some travel opportunities for folks. So although in the short term there will absolutely be an impact, it will create jobs as well in different sectors. So we might see some unusual suspects in construction and things like that.
Amy, what are the trends that you're seeing that you think are most notable in today's workforce? This on a week or so where we've heard JP Morgan telling its workers, hey, everybody back or they haven't said it yet. They're, according to sources, expected to say everybody back in the office 5 days a week. But what is it? Is it flexible work or is it not? Is it, I don't know, people maybe thinking about the trades versus going to college? What are you seeing?
All of the above. So flexibility is key, and it's the word for 2025 to keep a watch out on. Whether it be flexibility in your schedule, whether it be flexibility in whether you have to drive into work or you can work from home, that remains key. We're also seeing, this need for upskilling and reskilling as we continue to have a skills gap, most noticeably in IT and healthcare. So companies will still continue to focus on how can they upskill and reskill existing employees, as well as even looking to start early. At Adecco, we have a program called YES, where we work with 16 and 17-year-olds on youth-based learning, on work-based learning opportunities so that companies can help create the workforce of the future. The other trend we're really seeing, Carol, is the return of the retiree. So 1 in every 8 retirees is looking to get back into the workforce, and employers are looking to take advantage of that skill and tenure and trained employee.
Yeah, so both ends of the spectrum, right? The younger, some interesting things going on, and those that are older in terms of employers, or employees, I should say. Amy, thank you so much. Have a great weekend. Happy New Year as well. Senior VP at Adecco. Coming up next, a longtime public servant, advisor to several presidents on today's world and challenges. We're going to talk with Stuart Eisenstadt. He's coming up right after a quick break.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Jobs Friday, we've got a Wall Street sell-off. Equity market lower across the board. Broad-based selling right to the numbers. S&P now down by 76, drop there of 1.3%. Stocks getting hammered. The Dow down 1.4%. NASDAQ also down 1.4%. Russell 2000 index of small cap shares now down by 2.3%. 10-year 4.76% with a 2-year 4.38%. Briefly, we had the 30-year hitting 5%. Spot gold trading higher, 0.8%, $26.87 the ounce. West Texas Intermediate crude up 3.6%, $76.56 a barrel. And Bitcoin now up by 3%, $94,893 on Bitcoin. U.S. Supreme Court justices have signaled they may uphold a law banning TikTok in the U.S. if it is not sold by its Chinese parent company by January 19th. Earnings news, Delta after earnings up 8.6% right now. Constellation Brands after earnings down 17.2%. Walgreens Boots Alliance after earnings surging 29.5%. And Donald Trump, the first former U.S. president convicted of a felony, has been sentenced by a New York judge to no jail or probation for his hush money case. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week. Well, our next guest has spent a decade and a half of public service serving 3 U.S. administrations, including former presidents Jimmy Carter and Bill Clinton. Joining us right now is Stuart Eizenstat. He's former Deputy Secretary of the Treasury, Undersecretary of State for Economic Affairs, former Undersecretary of Commerce for International Trade, and former U.S. Ambassador to the European Union. He understands a lot of how the world works, certainly from a U.S. perspective when it comes to policy and geopolitics and more. He was President Jimmy Carter's chief White House domestic policy advisor and wrote a biography of him entitled President Carter, The White House Years, and gave a eulogy at the state funeral yesterday for former President Carter. Today, Ambassador Eizenstat is senior council member at Covington and Burling, and he joins us from Washington, D.C. Ambassador Eizenstat, thank you so much for being with us, and we are very sorry for your loss.
Thank you very much. I have known Jimmy Carter for 55 years. I was his policy director when he ran for governor of Georgia, then when he ran for president, and then 4 years in the White House as his chief domestic advisor. So it was a personal loss, but he lived a long life, and he in many ways taught us how to live a life of purpose, a life of faith, a life of determination, of honesty. And one of the things that I really tried to stress in my eulogy was that we shouldn't only look at him as the greatest former president, which he was, 43 years, curing 2 African diseases, monitoring over 100 elections, building houses for Habitat. Rather, we should lay to rest the myth that his greatest achievements came only as former president. And I believe that as we look back at what was actually accomplished, that we will see that he was one of the most consequential one-term presidents in American history. And I say that I wasn't nominating him for Mount Rushmore, but he belongs in the foothills with other presidents who have really made the country stronger and the world safer, and he did. And I tried to lay out in my eulogy what major things he had accomplished.
You know, maybe not Mount Rushmore, but you did call him a Renaissance man for all these different things that he had done. You mentioned that in your eulogy. I want to say that I'm glad you went there in terms of his first term or his only term in terms of what he accomplished, because I do feel like so much of the narrative and conversation since his passing about is all that he achieved once he left. But it's remarkable, and in listening to the eulogies yesterday, yours and others, about the issues that he worked on in the White House, whether it was the Middle East, whether it was inequalities, whether it was the environment. These are things that are with us today and pressing and challenging issues. And I think about the environment, and here we are watching the fires out on the West Coast. I want to kind of go there, because obviously this was something that President Carter thought about. What is wrong, and why hasn't our U.S. policy maybe on the environment and climate change specifically, why aren't we maybe better and
well, he was, I think, the greatest environmental president since Theodore Roosevelt. He literally doubled the size of our national park system with the Alaska Lands Bill. He had strong amendments to the Clean Air and Clean Water Act. But interestingly, he did the Superfund to clean up chemical waste.
Right.
And all of these are major accomplishments. And in fact, we put out a report in 1980 called the Global 2000 Report, which forecast climate change. He on energy really did everything together. He deregulated oil and gas, that is, ended the price controls, which led to a huge upsurge in production. So we're now the #1 producer in the world of both. But he also had the first incentives for conservation, like insulation, and the first incentives for renewable energy, like solar, and even put symbolically solar panels on the White House. I mean, this was done like in the 1978, 79 period. So he already envisioned that as being a really critical thing for the United States. He really inaugurated the whole clean renewable energy era.
Ambassador, you talk about all his accomplishments, and look, I think it's important for us to look at historical context here. Why then do you think this didn't resonate with voters, and he lost in the election of 1980 so badly to Ronald Reagan?
That's a good question, and all the op-eds that I've written on his life in the Wall Street Journal and elsewhere, I mentioned that. And I hope we don't end, by the way, before going to deregulation, which even Senator Graham, a Republican senator, said transformed the whole U.S. economy. But let me answer your direct question. I call it the 3 I's that were against him. First, inter-party warfare with the liberal wing of the Democratic Party, headed by Ted Kennedy. It divided the convention in 1980. Kennedy never really reconciled and worked for him, and that was a huge disability. Second, the second I is inflation. We had inherited high inflation. It was part of the 1970s with Nixon, who had double-digit inflation, and Ford, and we had double-digit inflation. But that was largely powered, as was Nixon's, by the way, by the oil shock. It was the OPEC embargo against the U.S. in 1973. It was the Iranian revolution and shock in 1979, 1980 that just hugely increased the pressures. But here is one of the most courageous things he did. And it makes the point that much of what he accomplished only blossomed after he left. So let's put ourselves in July of 1979. Inflation is roaring. Gas prices are going up. Gas lines are occurring. And he decides, over the objection, and I'm not exaggerating, of all of his advisors, to appoint Paul Volcker to head the Federal Reserve, knowing in advance, because Paul told him in the Oval Office, that if I'm appointed the head of the Fed, I'm going to have to take drastic actions on interest rates that are going to make it very difficult for you in an election year in 1980 in terms of a potential recession, higher unemployment. And he said, Paul, I cannot make my legacy leaving this kind of inflation. You take care of the economy, I'll take care of the politics. Well, the fact is, inflation dropped like a rock because of Paul's, but only in Reagan's first 2 years after Carter had already left. And third is Iran. The Iran hostage crisis, 444 days, was so unbelievably debilitating and humiliating. Carter made a choice early on that he was going to save the lives of the hostages rather than take dramatic military action, which would risk their lives. All of them did come back. All of them came back safe. But he paid a huge political price for it.
Well, Ambassador Eisenstadt, one of the things I think someone said during one of the eulogies is that he was farsighted. In other words, he thought about longer-term impact, not on only the current generation, but generations to come. We only have unfortunately, about 3.5 minutes or so left here. And I do think about policies today that he seemed to have some insight, some foresight, some farsightedness, whether it was the Middle East, whether it was China, whether it was equality in the environment. When you look at the divisiveness today and the political swings that we are saying and extremes, Americans are looking for something else, and maybe they don't feel represented. How do you think about the environment today? President Carter tried to represent everybody.
Let me give you 3 answers to that. First of all, we had much more bipartisanship then. Much of our legislation, and we had almost 70% of our legislation passed. We had regular meetings with Republican leadership, regular breakfasts, as well as Democratic. Second, he had a major role in ending the Cold War. Reagan gets the credit for it, and he deserves credit, but all the weapons systems which Reagan implemented, the MX mobile missile, the cruise missile, the stealth bomber, intermediate nuclear forces in Europe, every single one of them, he started. And Dobrynin, the longtime Soviet ambassador, in his memoirs said that Jimmy Carter's human rights policy played a major role in undermining the Soviet Union. And last, he said, I'm going to do the right thing regardless of politics. And let's take deregulation, which would be an important subject for Bloomberg. When we came into office, there was tight regulation on routes and prices for all of our surface and air transportation. No new entrants, rigid prices administered by government agencies. Jimmy Carter deregulated every single one of those. Deregulated airlines, which made it possible for competitors to come in. Today, 90% of the public flies, only less than 50% did then. Trucks and rail deregulation made a more efficient supply chain. Deregulation of telecommunications allowed the cable era to occur, and he even deregulated beer industry, which led to the growth of craft beers.
Here on a Friday, beer industry. I'm in on that. Hey, listen, we only do have about 35, 40 seconds, so forgive me for asking you to be brief if you could. But I do think about those major initiatives that you are laying out as you talk about the former president's legacy. 30 seconds. Do you think the country is moving in the right direction when it comes to laying out those long-term plans? And again, I just ask that you be very brief.
I do not. I think we're very short-term focused. I don't think we're looking around the corner at the real challenges of climate change, the real challenges that will come from China and how to combat it. So I really think we're looking at a very short-sighted, narrow political way of attacking these problems, and we're doing it without the bipartisanship that Jimmy Carter was able to foster.
I so appreciate that, and I so appreciate you reminding us of all the things that happened during the Carter administration. I think history always teaches us, right? The things that go right, the things that go wrong, but it's an important way in terms of our way forward. Ambassador Eisenstadt, thank you so much. Stuart Eisenstadt, former U.S. ambassador, and so much more in terms of his public service, currently at Covington and Burling, joining us from D.C. Coming up next, an update to the West Coast we go and those L.A. wildfires. This is Bloomberg.
It's 2:40 on Wall Street. Stocks are trading lower all day right now, with the S&P down 76, drop there of 1.3%. Traders are slashing their bets for Fed rate cuts this year after this morning's blowout jobs report. S&P, as I mentioned, trading lower, down by 1.3%. We've got the Dow down 1.4%. Nasdaq down now by 1.3%. 10-year 4.76%, with a 2-year 4.38%. Right now we have got the price of gold shifting higher, up 0.8%, 26.87 the ounce. West Texas Intermediate crude up 3.8%, 76.73 for a barrel of WTI, and Bitcoin rallying 3.4%, 95,250 on Bitcoin. Constellation Energy has agreed to acquire closely held Calpine Corp for $16.4 billion to add scores of power generation assets across the United States. And U.S. Supreme Court justices have signaled they may uphold a law banning TikTok in the U.S. if it is not sold by its Chinese parent company by January 19th. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week on this Friday. We continue to track what's been going on the West Coast, the LA wildfires. Our latest off our live blog, the death toll rising to 10. More than 29,000 acres have burned. Over 150,000 people remaining under evacuation orders. The biggest blazes in the Pacific Palisades. Pasadena remains mostly uncontrolled. And then we have insured losses now estimated in excess of $20 billion by J.P. Morgan. We're going to talk about the insurance angle in just a moment, but we do want to head to the West Coast. Our Bloomberg News national team managing editor, Sarah McGregor, she has been on the ground. She's joining us on the phone because, as you would guess, service. We're hoping to get her on Zoom and show you some pictures, but it's a little bit tricky, as you would imagine, out there. But Sarah, we are grateful for your reporting. Tell us where you are and what you are seeing.
So right now, thank you so much, Carol. It looks like I'm in the middle of paradise. I'm next to the Pacific Ocean. Honestly, it's a beautiful day. There's blue skies, but there's also ash in the air. It smells like burning rubber. And my colleague and I, John Gittleson, the LA bureau chief, just went through the Palisades. We were able to get in there, of course, because we're pressed, but many people aren't yet able to even see their homes. They're relying on, images from a lot of our colleagues that we saw taking photographs or, doing broadcasting live, of course, from the area. And I'll just say I would say emotional right now. It's, very surreal to walk through and see that, the place has been as devastated as we've all been sort of describing through some of the stories and images we've seen on the TV right now. And, a lot of folks up there, of course, the great side of humanity, just helping out, supporting each other, handing out food, emergency service vehicles from all over the city, the state, the U.S. helping out.
In terms of what you're seeing, Sarah, is it total destruction, or are there still some structures that were spared, that were left standing, that seem like people can move back into, or is it just total devastation?
I would say it's quite a bit of devastation. The homes that have been burnt to the ground, it's, again, it's just heartbreaking to see because there's a lot of chimneys that survived, maybe a white picket fence outside a home, but the home's leveled, burnt out cars. Every once in a while, you'll see an entire house that survived or a few shops in a row. There's a Chipotle I looked in the window of that's next to a Chase Bank and a number of other businesses that completely burnt to the ground that survived. And you can see in there that they moved the umbrellas indoors, for the outdoor seating. And there's a cloth that someone left who was obviously, wiping up things and when everyone left in a hurry. And for some reason, the Chipotle survived. So there's no rhyme or reason, it seems, in some cases for what's lasted through the fire and what hasn't.
You're there on the ground. I'm assuming yesterday you would not have been able to get there. Or tell me, what has changed from yesterday in terms of access for you to actually see some things firsthand.
Well, as we know, very little containment still for the Palisades fire, and of course the Eaton fire is still raging strong.
Right.
We were not on the front lines of the fires, obviously where the firefighters are. It was described to us that they're absolutely exhausted. They are working triple time, and sometimes they're on 48-hour shifts. One man we met was handing out bags, and in it was chapstick because the wind and the fire is just so drying that firefighters, they need food, they need many things, but they'll just rip open the bags for the chapstick because it's like such intense conditions. So again, plenty of areas, I think, where the fires are still burning and everyone's in full force. Some areas where the fires have passed through, like we walked through, that, we're able to get into. But again, no sense of really when families will be able to get back.
Yeah, and I guess the question that so many people have is, what happens next and how long these families are going to be displaced, how long it takes for homes to be rebuilt, if they're even able to be rebuilt. More than 150,000 people remain under evacuation orders, Sarah. Tell us about the air quality, if any of these evacuation orders are being lifted, if people are able to go back to places that they were evacuated from because the situation has improved in other areas.
Definitely there are areas, I think, where people obviously, areas that weren't burnt, where people as a precautionary measure were evacuated from are going back. But it's a giant question on my mind walking through the Palisades, for instance, today, of where are these people whose homes were burnt, where are they right now, and what decisions will they have to make in the coming days? I think something really interesting, Rick Caruso, a local developer, mentioned in some interviews is that a lot of the homes in the Palisades were generational homes passed down. So these people have lived there for generations, and now they'll have to make some hard decisions about whether to rebuild, whether to relocate. It's just coming, lots of hard questions.
Yeah, and heartbreaking. Yeah, I was reading a little bit about that too, these multi-generational homes. Sarah McGregor, thank you so much, and do stay safe, please. Bloomberg News National Team Managing Editor Sarah McGregor on the grounds there in the Pacific Palisades. And we should point out that we're going to talk with Airbnb's executive director, Airbnb.org's, I should say, executive director, what they are doing to help people who have lost their homes out there in LA find some housing.
Well, the human impact, the loss, certainly the most important. It goes without saying, as Carol mentioned, our hearts are certainly with everybody who's been affected, so many people. We also, though, continue to get more information about the costs and the possible financial impact, the insurance costs. A voice on that, who we've turned to repeatedly throughout the week, Bloomberg Intelligence Property and Casualty Insurance Senior Analyst Matthew Palazzola joins us here in the studio. Matt, when we were talking yesterday, $10 billion was the number you and the team had come up with at Bloomberg Intelligence. You said that would likely be revised higher. What's the latest calculation?
Yeah, so it was revised higher. What we were saying yesterday, and same thing today, is being surprised with the speed that structures are being destroyed. It was 1,000 structures very quickly, and then after we talked, it was 5,000. So that's pretty high, pretty unprecedented to see that many structures destroyed that quickly with so little containment in the fire. So as a result, we're thinking now it's probably 10 billion as a low case, and could be up to 20 billion of insured losses.
I mean, every day this fire goes on, right? It's going to be a new number. It's going to be a higher number.
Yeah, and I would not expect it to double like this, but I could see it going up higher.
The thing is, though, I'm looking at our live blog and our Eric Roston just talking about, and I think quoting some folks from NASA's Goddard Institute for Space and others, just reminding us last year was the hottest year in recorded history. First year that the global average temperature passed 1.5 Celsius above the pre-industrial climate. I mean, the climate's warming. This isn't going to get better. And again, I think it's something we talked about with you yesterday, the frequency of these events. Does it create a longer-term risk picture, potentially for those of us who want insurance and also for the insurance industry?
It certainly does. And one thing I'd say is it's going to be regional, right? So this will impact California significantly. It will make it harder for people to get insurance. It will make insurance more expensive. It talks about maybe the case that it entices the regulators to work more with the companies to get into the state. I don't know. That's probably a blue sky scenario. But, I don't see this impacting a nationwide affordability issue. But it'll be a thing where people will want to live in these areas, and the cost will get to the point where are we sharing it among, everyone, or, do we make it, prohibitive for people to live in these areas?
I'm wondering I'm just wondering if it's just so hard to think about people rebuilding at this point and the economic cost of that and where these people are going to go over the next few months and years, Carol, because the devastation
they
is
weren't
just
all
so
celebrities.
widespread.
Let's just remind everybody. A lot of people, as we heard, multi-generational. Matt, thank you so much. Matt Palazzola of our Bloomberg Intelligence team. Coming up, we check in with Airbnb and what they're doing to help out.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we just gave you an update on the wildfires out there in the Los Angeles area, looking at it from a couple different perspectives on the ground and what we are seeing, but also, you know, we do think about the business and financial impact. In the meantime, you continue to see a lot of organizations that are rallying to help out those affected by the LA wildfires, including some to help find shelter. So let's get into what Airbnb.org is doing. Their executive director, Christoph Gorder, is with us. He joins us from Salt Lake City. Christoph, nice to have you here with us. First of all, what can you tell us about what you are hearing about operations there, your teams in the area when it comes to the fires?
Great, thanks for having me on. And, you know, our hearts go out to the thousands of families that are just going through the most traumatic events right now. Airbnb.org, we're a nonprofit. We were founded by Airbnb a few years ago, and we provide free housing in times of crisis like this. So we've been working in LA since the fire started on Tuesday. Housed our first guest yesterday, and now I think we're probably, the last numbers I have are we've provided housing support to about 6,500 people.
Wow.
In the last 24 hours, but the need is just enormous.
How does that housing support manifest, and what's the relationship that you have currently with Airbnb? Are you taking Airbnbs that are available and then essentially fronting the cost, covering the cost for those affected?
Exactly. So the way we work is we partner with a local nonprofit. In this case, it's a nonprofit called LA 211. which covers all of LA City and LA County. They are very connected into the community. They identify and vet the families who are going to stay with us. Once they've approved them, we issue them a credit to book the Airbnb that works best for them and their needs, where they want to be, if they need wheelchair accessibility or it needs to be pet friendly. And so they're able to just sort of pick the Airbnb that's going to be most convenient for them. And then we work with hosts to get a discount on that, and the balance is paid for by Airbnb.org.
You said about 6,500 people you've already helped out, but you said the demand is incredible. Can you give us an idea of how many people are reaching out and looking for your assistance?
So it's really fast moving. I mean, the 6,500 number is from last night, and I'm just waiting for some updates today. But we'll be thousands more will have gotten help just this morning. In terms of the need, immediately right after we opened the program on Wednesday, we had thousands and thousands of requests, and so we've got a backlog right now, and we're working our way through it. But the situation is still evolving, and there are more areas, opening up for evacuation, and so it's still, I think, unfortunately, very early days. So it's hard to get a number really nailed down because it's moving so fast.
One thing that I'm trying to understand is how long some of these folks are going to be displaced. I mean, think about it from the perspective of how long it takes to rebuild something, factor in not just the insurance issues, but also the fact that getting building materials and folks to actually do that work, those people are going to be in a very short supply because of the scale of this devastation. How long do you plan to be housing people in the wake of this disaster?
Well, we've committed, in this immediate emergency, we've committed, and Airbnb is there to support us, to provide emergency housing to 25,000 people. And so we're going to do as much as we can. We sort of look at this in a couple phases as this evolves. The first phase is the evacuation phase, and there the stays that we're providing are very short. So it's about a week. Now, most of the people we're hoping are going to be able to go back to their homes in these evacuation areas, but of course there are going to be thousands and thousands of people who are going to need a long-term stay. And so then we'll move into phase two. We'll extend the stay out to about a month, and we're sort of an emergency stopgap while people figure out their other options. So think of us sort of like as the ambulance that gets you to the hospital, and then there'll be other options, FEMA, insurance, et cetera, that people will need to do, but it's a long, long road to recovery.
Yeah, we can only imagine. Christoph, you guys have been doing this, in other either natural disasters. Tell us about, kind of what you guys have learned about this process to where you are today.
Well, the idea has been around for a while. It goes back to actually 2012 when Hurricane Sandy hit New York City, and there was an Airbnb host in Brooklyn who called in and said, hey, I see all these people displaced. Can I open up my home for free? And that's where the idea started. And very quickly, there were over 1,000 hosts in New York City who opened up their homes for Hurricane Sandy victims. And that went along for a few years. But by 2020, we realized it was a really big idea. And so Airbnb.org was formalized. It was created as a separate nonprofit. And now we respond around the world to disasters. So unfortunately, in Southern California, we were just down in that same area in December in Malibu, working on a fire there. And it's continuous for us around the world and throughout the year.
Before you go, just got about 20 seconds, 30 seconds. How can people find out more information about this organization?
Hop on our website, airbnb.org. There's two ways you can help. If you make a donation, every penny will go to pay for a family in need for a stay, because Airbnb covers all of our operating expenses. So if you want to help people in LA, it's a great direct way to do that. You'll help us help more people. If you're in the LA area and you've got a place that you can host a family, you can learn about how to sign up to host, and we also need your help there. So,
and if somebody needs a place to stay, how do they do that, real quickly?
So you reach out to 211, LA 211, either on their website or call them. There's a very easy intake form, and they'll take you through the process. There's a little bit of a delay right now because we've got so many people in the system, but be patient, we'll help you.
Good luck with your efforts. Christoph, thank you so much. Christoph Gorder joining us, Executive Director of Airbnb.org, joining us on this Friday. All right, folks, for those watching on TV, the close coming your way. Tim and I continuing on Bloomberg Business Week.
is CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Michael Wallace. The Los Angeles area wildfires are still spreading. Firefighters are hoping for a break from the strong winds. This Altadena resident is happy to see the National Guard has arrived.
I really appreciate that they're here and keeping the area safe.
CBS's Tom Hansen is hearing survivors' stories in Altadena.
Dale Fielder never imagined leaving the magical place he called home.
When I moved there 16 years ago, my wife said, well, can you see yourself here in 5 years? It's like, you could bury me in that backyard.
The professional musician and owner of an independent jazz label lost nearly everything in the fire, including his instruments.
President Biden says fire victims will be getting help from FEMA.
This program gives one-time payment of $750 to survivors so they can quickly purchase critical items like water, formula, gasoline, and prescription drugs.
At least 10 people have died in the fires. Much of the Deep South is struggling with snow and ice. WSB Radio's Austin Eller is in Atlanta.
Georgia transportation crews are working hard to salt and plow the roads to clear up snow and ice, but Governor Brian Kemp says it's been a real challenge.
It's hard to keep up with Mother Nature, but we're doing our best.
Georgia DOT Commissioner Russell McMurray says the major thoroughfares are the big focus.
Our first goal is, again, keeping the interstates operational, moving, interstates, ramps, and then state routes.
Schools and businesses across the metro are closed as a result. Austin Eller for CBS News, Atlanta.
4 people were injured when a Delta jet aborted takeoff in the snow in Atlanta. A Manhattan judge has given President-elect Donald Trump a penalty-free sentence of unconditional discharge in his hush money case. He is now a convicted felon.
This has been a very terrible experience. I think it's been a tremendous setback for New York and the New York court system.
Trump plans to appeal. The Supreme Court seems ready to let this month's TikTok ban take effect after hearing arguments today.
Congress and the federal government say TikTok poses a huge threat to national security, and Supreme Court Justice Brett Kavanaugh says.
Just on the data collection, that seems like a huge concern for the future of the country.
But lawyer Jeffrey Fisher, representing TikTok users and content creators, says.
Even if all this act goes into effect and the law goes through, TikTok gets to keep all the data.
Allison Keyes, CBS News, Washington.
The Labor Department released a better-than-expected jobs report for December. Employers added 256,000 jobs. CBS's Jason Brooks says that has Wall Street worried.
Stocks are selling off on the belief that the jobs gain likely cements a rate pause from the Federal Reserve at its meeting later this month.
Dow is down 586 points. The Nasdaq's down 255. This is CBS. Ukraine is gearing up for the Trump administration, as is Russia. CBS News correspondent Cammie McCormick has the story.
Ukraine says it expects high-level contact immediately after Trump takes office, including a meeting between Trump and Volodymyr Zelensky. The Kremlin said today Russian President Putin was also open to talks with the incoming president. Trump has repeatedly said he can bring a swift end to the nearly 3-year war between Russia and Ukraine, which he calls a bloody mess, but he has not presented a plan.
Zelensky is applauding the new U.S. sanctions against Russia's oil sector. The widow of the late opposition leader Alexei Navalny says Russia's financial watchdog refuses to take him off its list of terrorists and extremists, even though he's dead. The watchdog sent his widow Yulia a letter saying Navalny was being investigated for money laundering and the financing of terrorism. Navalny died in a penal colony last year. Yulia blames Russian President Vladimir Putin for his death. Michael Wallace, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
And a very good afternoon, everybody. 55 minutes to go until the closing bell on this Friday, January 10th. Hey, coming up, we're going to give you another update on the LA wildfires, continuing to watch that very closely.
Also, the ups and downs of Delta Airlines today and the future of TikTok, Carol.
Yeah.
What happens after the Supreme Court?
Talking about some ups and downs. And we've got an outlook on Bitcoin from the team over at Swan Bitcoin. So a lot to come over the next 2 hours. First up, though, a check on the trading day and your top business stories. Here's Charlie Pellet.
Hi, thank you very much. It is a down Friday. Do want to begin with a developing story. Hershey to announce the departure of CEO Michelle Buck. That, according to Semaphore, that headline right now on the Bloomberg Professional Service. Last month, you recall, Bloomberg reported that Mondelez International, the snacks and sweets giant, have been exploring an acquisition of Hershey and a potential deal that would create a food giant with combined sales of almost $50 billion. Hershey shares down now by 2.3%. A down Friday, Jobs Friday, with the S&P down 1.3% right now, down 75. The Dow down 1.4%. NASDAQ down 1.3%. 10-year 4.77%, with a 2-year 4.39%. Gold up $18 the ounce, and West Texas Intermediate crude up 3.6%, $76.59 for a barrel of WTI. U.S. Supreme Court justices have signaled they may uphold a law banning TikTok in the U.S. if it is not sold by its Chinese parent company by January 19th. Again, recapping, S&P down 1.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Do appreciate it. Well, shares of Delta Airlines, they're higher right now by 8.5%. Lots of news, though, including flight cancellations in Atlanta due to snow and passengers injured on a flight after Delta aborted it at Hartsfield-Jackson Atlanta International Airport. Carol, this after a very upbeat quarter. I mean, it pushed shares up the most in more than 4 years to a record intraday. I believe this should be one of your gainers.
It's totally one of my gainers,
good.
man. The stock is still up about 8% as we speak, Tim.
Okay, well, let's get some more. We got back with us Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst George Ferguson. He joins us from New Jersey. George, the plan was to talk to you about the most recent quarter for Delta. We're going to do that in just a second, but a couple hours ago, we got news that 4 passengers were injured after a Delta flight aborted a takeoff. What do we know about this?
Yeah, so all I've heard is that for some reason the pilots thought they had an engine problem, tried to stop the airplane, obviously, before the end of the runway. It sounds like it was a pretty rocky stop, and a couple of people have gone to the hospital. It was a Boeing 757. It's an airplane made a long time ago. I think, no real attachment anymore to the manufacturer. It's probably been maintained so many times, everything would be related to whatever maintenance work was done in the airplane. It's an older airplane, so you can have engine problems with those kind of planes. But, aviation, airline travel have become very, very safe in the last decades. I don't know if this has something to do maybe with some of the windy conditions in Atlanta. Definitely the snowy conditions probably led to part of the problem.
I mean, to a certain extent, it also speaks to just how safe air travel has become, especially here in the United States over the last few decades, when something like this makes such big news, right?
Agreed.
Okay, so that's the news on the latest from what's going on with Delta, at least today. Not financially. Financially, much more rosier picture. We got results from the company this morning, among the first major companies to report earnings for the most recent quarter. Delta's really firing on all cylinders, especially here in the U.S. What's going on?
Yeah, so it was a nice report. It definitely beat street expectations and ours. Revenue came in better than we expected. Most of the expense lines were pretty much in line. The revenue story, I think, is a little bit nuanced. Loyalty revenue was a big contributor to the revenue beat. That's money they're getting from Delta-branded credit cards. And from that perspective, Delta is really a powerhouse, I think, in that loyalty revenue world. I think I'm sort of approaching $2 billion in revenue per quarter. So that's something that's probably not going to filter through the rest of U.S. airline earnings, right? I'm not going to expect some of the lower cost carriers some of the smaller carriers to have as good a loyalty program. When we take a look under the hood of sort of revenue and yields from the different regions, I note that domestically, we saw yields rise 1%. We think that's synonymous with fares. That's okay, a little bit middling. I'm a little concerned about domestic supply demand there. Atlantic was up 3%. That's nice, especially during the winter seasons. So that market continues to be strong. Latin America down 1%. It's high vacation season down there. So that was weaker than we probably would have hoped. And again, a little bit concerning. And then Asia Pac was down 4%. That's a very small market. Last thing I'll say on this part, we could talk further about the results, but last thing I'll say on the revenue side was that premium growth beat basic economy 4 times.
Wow.
And I think that's the story here. It's about premium, it's about Atlantic, and it's still it's about that loyalty program.
Yeah, I gotta say, people who fly Delta, man, they're like Delta, Delta, Delta all the way. I hear it constantly. I'm like
a sorority person. Delta, Delta,
it's
Delta.
A cult.
It is. No, it is totally. It's totally. Does it say anything? I'm looking at the S&P 500 Super Composite Airlines Sub-Industry Index. Just looking at one of them. Most names in the index are higher today. Should we assume what we get at Delta, we're going to get from the others as they start to report earnings?
I don't think so. I think, again, there's probably a really good read across to United. I don't think United has good of a loyalty program, so maybe it takes a little bit of shine off it. Well, United probably a little bit better into Europe, so maybe that's a little bit better. So pretty similar. Americans had its challenges with some of its distribution strategies. I wouldn't expect it to do as well as Delta and United. And the low cost, I think, are getting better. I think supply demand is improving in the basic economy world, but I don't think it's going to look as strong as Delta either. So I think you're leading with the best in the space, and so could be challenging as we get further into earnings season.
Does it mean that Delta, at some point, George, from a strategy perspective, might start to decrease the number of seats that it has at the back of the plane to make more room at the front and sort of move away from that competing to a certain extent in the basic section with some of the ultra low-cost carriers?
So the interesting thing I think about this premium turn we've had is that you'll probably be surprised how much the definition of premium has expanded, right? And so I think they will be looking for more premium content. Some of it is fabricated out of the old seats. You know, in the old days, like I think you and I got a ticket, we went on the airplane, everything after the premium economy section was basic. You paid about the same price, you sat anywhere you wanted. Now, you know, you get a seat next to the window or you get a seat on the aisle. They try to charge you up for that. The basics, I guess, are just the middle seats, unless it's a middle seat with a little more leg room near an exit row. So I don't see them re-racking the whole fleet to try to increase business and premium economy. They are doing it on some airplanes, but I also see them being nuanced about trying to charge the customers for anything that the customer finds valuable. And I think that's the new world.
I'm waiting for you. Want some oxygen? You want an oxygen tank? You're going to have to pay for it. I know it's coming.
Rude.
George Ferguson, I'm just saying, it just feels like everything. George Ferguson, have a great weekend. He's Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst. All right, so Delta and Airlines definitely on our mind today, Tim.
Yeah, so too is the tech space and TikTok specifically because the fate of the service is up in the air. The Supreme Court signaling it's likely to uphold a law that would ban the social media platform in the U.S. if it isn't sold by its Chinese parent company by January 19th. With more, we're joined by Caroline Hyde, co-host of Bloomberg Technology on Bloomberg TV. She's joining us from New York this afternoon. So, Caroline, the Supreme Court, several of the justices cast the laws being focused not on speech but on ByteDance. They kind of signaled and suggested that they see the U.S. national security concerns as overriding the free speech interests of the companies and the content creators. Does this mean it's the end for this version of TikTok as we know it?
Yeah. Well, it seems as though within 9 days, let's call it, we could have a blackout. What does that mean? It means that you aren't able to access. So if you haven't already downloaded the app, you wouldn't be able to re-download or newly download TikTok on Google or Apple's app stores. And then indeed, they'll be taken off websites too. So the app would then fail to be updated. You can still use it, but ultimately it wouldn't be as good a product. All of this is on the back of, if we're reading the tea leaves, Tim, It's about the questioning that we were listening into at the Supreme Court. And I'm afraid those justices sounded tough. They wanted to basically ask these tough questions of, really, is this about free speech? For them, it sounded as though the worries of national security, of the ultimate ownership of TikTok, which is ByteDance, was Chinese-based, is the key issue for them here.
We know that President Trump has changed his mind on this significantly. I mean, it was during his first administration that he actually wanted to ban TikTok, but during the electoral process leading up to this election, he's actually reversed course there, Caroline. Could he come in January 20th and have any power to keep TikTok as we know it?
So here's the nuance, right? Because we already know he's filed documents to the court asking for basically a stay for the idea that we wouldn't see a ban come into effect until after he's taken on the role as president, and he thinks he can insert himself as a key negotiator here and get what's necessary from a national security perspective and a First Amendment perspective. But really, if you're looking at Bloomberg Intelligence, Matthew Shenenholt over there has been key on saying there is a very unlikely chance he'll get this through. It'd be totally unprecedented, don't get me wrong. This president-elect does unprecedented things, but ultimately there's an idea that would be very difficult. And remember, this has got bipartisan approval. It would be very difficult to push Congress to undo this in some way.
Hey, listen, Caroline, we have to ask you about Frank McCourt. You guys talked to him on Bloomberg Technology. He and a group of investors, right? They wanted to buy or do want to buy TikTok, or where is it?
In the last 24 hours, he had just filed the documents to be able to make a bid. And ultimately, if ByteDance suddenly feel that there's no way that they're able to stop a ban, and actually they do want to sell US TikTok, well, the offer is there, and they could then get this 30-day extension or even longer to be able to negotiate some sort of sale. Frank McCourt Jr., billionaire, but also heads up this Project Liberty. It's a very groundbreaking idea here. He's presented, him and his consortium of what he says is private equity players and family offices have built the technology to be able to move across, migrate onto a totally different technology stack. We're talking about the first ever truly decentralized social media company at scale. And it would therefore offer what he thinks is a much better scenario for social media. Yes, you still have 170 million users of TikTok able to use it in the United States, but the algorithm is totally different. It doesn't have you forever scrolling, and indeed it would be a way in that you own your content. But look, time and time again, ByteDance has said they don't want to sell. But what's interesting is ByteDance has a lot of US investors. Just think General Atlantic among them, Susquehanna, and that's a key one because one of those particular Susquehanna teams are indeed, of course, Dave Yass, who is one of the key contributors to Trump.
So glad we could check in with you. Have a great weekend. Caroline, thank you so much. Doing double duty for us. Caroline Hyde, co-host of Bloomberg Technology on Bloomberg TV. Catch them out 11 a.m. Wall Street time every day. Coming up next, a check on the fires.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower across the board. In fact, equities have wiped out their 2025 advance. The Dow, the S&P, NASDAQ, all in the red. We've got just about 39 minutes to go ahead of the close. The S&P right now down 92, down 1.6%. The Dow down 700, drop there of 1.6%. NASDAQ lower by 1.6%, down 319 points. Broad-based selling with the Russell 2000 index of small cap shares down 2.4%. 10-year 4.77%, 2-year 4.39%, 30-year did briefly trade at 5%. Spot gold up $21 the ounce. Spot gold up 0.8%. West Texas Intermediate crude up 3.6%. Bitcoin up 3.1%. 95,000 even on Bitcoin. Reaction to this morning's jobs report from Cameron Dawson, Chief Investment Officer at New Edge Wealth.
It is that question of, is good news or is good news bad news? We think at the end of the day, strong jobs are overall good for the equity market, but we have to take a hit to the valuation first to digest these higher yields if we continue to see this labor market hold in better than expected.
Cam Dawson of New Edge Wealth. You can hear more of the conversation on the Surveillance podcast. Download it wherever you get your podcasts. U.S. Supreme Court justices are signaling they may uphold a law banning TikTok in the U.S. if it is not sold by its Chinese parent company by January 19th. Among U.S.-based social media companies, Meta Platforms up 1.4%, Snap Inc. shares up now by 4.4%. Hershey poised to announce a leadership transition plan. CEO Michelle Buck stepping down next year. That according to Semaphore, citing sources. Hershey now down by 3.4%. And Donald Trump, the first former U.S. president convicted of a felony, has been sentenced by a New York judge to no jail or probation for his hush money case. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Do appreciate it. Well, the death toll on the devastating wildfires out in L.A. continues to rise. Now at 10, more than 29,000 acres have burned. More than 150,000 people remain under evacuation orders. The biggest blazes in Pacific Palisades and Pasadena, they remain mostly uncontrolled at this point. The financial wipeout, at this point, Carol, hard to calculate, but J.P. Morgan now estimates insured losses are more than $20 billion.
Right, exactly. And listen, we don't like to talk money and impact, but it is a part of this story. And of course, we continue to track certainly the human impact, no doubt about that.
For more, we're joined by David R. Baker, Bloomberg News energy reporter. He joins us from our San Francisco bureau. David, when we spoke to you yesterday, you were able to share a little bit of positive news with us about containment of some of the fires down in Los Angeles. What's an update today? Can you give us any good news?
I can. There is some gain in containment on even the biggest fires. It is still small. We are talking about just 3% contained for one of the fires, 8% for one of the others. This sounds like very little, but 24 hours ago, we had 0% containment. So in a way, this is progress. Now, at the same time, the winds are still blowing, and we're still seeing more spot fires popping up. And in fact, there was another 30-acre fire that just appeared right about an hour ago at the northern edge of the San Fernando Valley. And it's called the Archer Fire. It doesn't appear to be gigantic yet, but it's in a bad spot near a lot of homes, like some of these other fires. So this is still an incredibly fluid situation. And as firefighters are getting a little bit of a handle on one fire, they keep getting pulled away to these others to try to stamp them out as fast as possible. So it's kind of a bit of whack-a-mole right now.
I do want to mention we're set to hear a press briefing at 1 p.m. Los Angeles time, 4 p.m. Wall Street time. We'll bring you updates from that press briefing in about 35 minutes as we do get them.
You know, David, one of the things I keep looking at, and I just pulled up the 5-day weather forecast for the LA area. It looks like there's some maybe rain on Thursday, but that's a long way off. And red flag fire, weather warning, that has continued to be there. What do we know about maybe what's anticipated over the next 24 hours that could really change whether or not even more is brought under control or contained or not?
It is expected that we get a bit of a break over the weekend, but that the winds will start back up sometime later in the weekend, maybe Monday or Tuesday. So we're still in a situation where we're going to have a couple of these wind events without any rain in between them. And so it's going to be very dangerous all the way through the weekend into early next week. And bear in mind, you have a lot of people whose lives are completely upended by this and are basically camped out in hotels, in neighbors' apartments, neighbors' homes, or friends' homes here and there, trying to figure out exactly when they can restart their normal lives. And we don't know that yet.
All right, David, we're going to have to leave it there. Thanks so much for bringing us that update and for the updates throughout the week. That's David R. Baker, Bloomberg News energy reporter, joining us from San Francisco. Carol, the fire affecting so many, case in point, we were actually set to interview Corey Clipston, the CEO at Swan Bitcoin, about crypto, but he let us know a little earlier today that he now has to evacuate due to fires in Southern California, so he's unable to make the interview.
Right. Joining us instead is John Harhe, Swan Bitcoin's managing director. Swan Bitcoin, in case you don't remember, it's a platform that offers a host of services, including allowing people to buy Bitcoin in personal, business, and retirement accounts. John joining us from New York City. John, first of all, thank you for jumping in and talking with us. First up, Corey, okay? What do we know about any of your team that maybe had exposure to the LA wildfires?
Yeah, great to be here with you guys and standing in for Corey. So far, Corey and his family and his house appear to be okay, but he is quite close to the danger zone, and I believe he is helping some people who may have lost their home or at least had to evacuate. So it's pretty hectic over there right now, and it's one of those things where every day brings new updates. So yeah, definitely thinking about Corey and all of my other colleagues and everyone who is in that area right now.
It's hard to transition to talking about something like crypto when we spent so much time talking about the wildfires and the devastation out in LA affecting so many people. But nonetheless, we are going to do that because it is one area of green today in a market where we're seeing a lot of selling. Bitcoin up by 3% right now, though it's down about 11% from that all-time high last month, down this week by a little more than 4%. John, what's the outlook as we head into the new year, especially as we get the new administration in office? What's priced in right now?
Yeah, and today is an interesting day. I agree with you. To see Bitcoin be up a few percent while stocks are down, while bond yields are up, that's interesting. I don't want to read too much into one day, but it is noteworthy. Looking forward, outlook-wise, I typically highlight three things that I think will support Bitcoin's price going forward. One is continued relatively easy fiscal policy. Number two is continued relatively easy monetary policy. And then third is continued adoption. And if we double click on that adoption, I would say it's going to come from many places, but there's two big ones. One is potential nation state adoption. And here, of course, I'm talking about a new administration, Trump administration coming in. They're talking about what's being known as the SBR, Strategic Bitcoin Reserve. Some are calling it a stockpile, but either way, it would be the US government proactively and consciously adding and holding Bitcoin, which would be a big deal. And then the other leg of that adoption story is basically what MicroStrategy is doing, and it's corporate adoption. And they have bought just a ton of Bitcoin in the past several months here, and the pace of their accumulation is really increasing. I don't believe we're going to see MicroStrategy, they're in a class of their own, but I think it is going to be a big story for 2025. What nation states do, primarily driven by the US in terms of Bitcoin accumulation, and what corporations do, call it copycats of the MicroStrategy playbook. We're actually calling it LBE at Swan, or leveraged Bitcoin equity. It's a little bit of a nod to the old LBO, leveraged buyout. But that's what we're calling the MicroStrategy playbook, the LBE playbook, and I think there's going to be more companies that do that.
Can I just say, John, I'm listening to you, and some might say, and I'm waiting for the emails to come in, that both of those, forgive me, are maybe a little flimsy. First of all, I think the strategic reserves, I don't know. It's a long ways to get that, and I think there are a lot of folks that say that makes absolutely no sense.
Including some prominent Bitcoin investors like Nick Carter of Castle Island, who came on our show and got a lot of flack for saying he doesn't think the U.S. should do that.
Right, and I mean, as taxpayers, I think a lot of us would be like, wait, what is our money being used for? And the other hand is the MicroStrategy. I get that supply-demand equation and why that is supportive of Bitcoin, but again, it doesn't go to what is Bitcoin, what is it really being used for, what is that long-term usage that to me really then would help put in a floor that lasts around for a long time.
Yeah, it's great points you guys bring up, and I am familiar with Nick Carter's views. I think his views were nuanced. He was particularly against Bitcoin being accumulated by a state government, particularly the U.S., using the word reserve and the language that some people were using, that it would be a monetary asset, that it would somehow back the dollar, provide stability to the dollar. That is specifically what Nick was against. And he, in his article, he said that he's okay with a Bitcoin stockpile. So he made that distinction. My summary view is that regardless of what they call it, it's going to act like a stockpile. Even if they call it a reserve, I don't think we are anywhere close to a world where Bitcoin held by the US government is actually backing the dollar or providing stability to the dollar. So I guess you could say I kind of understand Nick's argument, but I think there is a world where the US owns Bitcoin as a stockpiled asset. And I think there is a relatively easy way for them to do that. And that's just them saying, hey, the roughly 200,000 Bitcoin that we hold, we're just going to hold on to it. And personally, I think that would be massive if the wealthiest, most powerful country in the world says, hey, we are accumulating we're just holding a Bitcoin as a strategic asset.
Maybe we need to tackle our deficit first before we start doing that and spending money on it. I guess my point is, I'm trying to understand, like, if that doesn't happen, you pull the rug out, that doesn't happen. If MicroStrategy starts to back off, what fundamentally is there to support Bitcoin?
Yeah, so the MicroStrategy piece, I would say Bitcoin is the primary use case for Bitcoin is a store of value monetary asset. That is distinct from Bitcoin being used as payments or medium of exchange. I think all of that will come, but that's many years down the road. So I think corporations, individuals, nation states, financial advisors, family offices will continue to use Bitcoin as a store of value monetary asset in 2025 and beyond. I think that is ultimately what provides some sort of stability or a floor for Bitcoin, but I actually think it will be pretty significant appreciation in the coming 12 months.
Appreciation is certainly helpful when folks are long Bitcoin or they're making leveraged bets on Bitcoin, such as Michael Saylor at MicroStrategy. But if we see a significant decline, then it starts to really hurt and be painful. What happens then?
Yeah, that's for sure true. If you're going to execute this MicroStrategy playbook, or the LBE playbook, as we're calling it, it does require that Bitcoin goes up on a longer term time horizon. I would point people to 2020 when Saylor and MicroStrategy made their first buys. Bitcoin did not go up right after that. It actually went down very quickly in the weeks after his purchases. But the way you execute that strategy is you do it prudently. If you're going to do it with debt, you do it with debt that doesn't have a maturity for 4 to 5 years. If you're going to do it with equity, you tap the equity markets when your stock is trading at a hefty multiple to your Bitcoin holdings. Those are just some of the ways. And you think about the ratio of the outstanding debt you have to your Bitcoin market value. So I think as long as people are doing that, those companies will be okay.
Gotta run. John, thank you so much for jumping in. Really appreciate this. John Haar, he's Swan Bitcoin's managing director. Coming up next, we're taking you down to the close on this Friday. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story, and the retailer, the craft and fabric retailer Jo-Ann, is considering its second bankruptcy filing in a year. Now let's head over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks under pressure from the start today after the blowout jobs numbers. The Dow is currently down 700 points. S&P's dropped 93 and the NASDAQ is down by 1.6%. The U.S. 10-year yield hits 4.78%. Gold and oil are in the green, and Bitcoin, that's higher by 3.5%. Among the main 11 S&P sectors, all were trading in the red, led by losses in the financials and real estate. And leaders to the upside in the Dow, Walmart and Chevron, while travelers fell 3.9% and led to the downside. After earnings, Walgreens soared 28%, while Constellation Brands plunged 18%. To its lowest level since 2020. Wrapping things up, HPE spiked intraday on a report they won a $1 billion server deal. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUA, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a twin. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 19 minutes to go until we wrap up the trading day. Charlie and Bill Maloney there breaking down the trade on this Friday. And we are definitely off our best levels of the session, but we've seen some definite reaction to the day's economic news, expectations about the Fed, and maybe pushing out, at least based on what we see in the trade, the first rate cut not until maybe October. So, but a lot can happen.
Ugh. Such what a parlor game we play.
We do indeed, don't we?
I mean, it's like
day to day, week to week,
day to day, week to week. Everything's different when it comes to what investors think the Fed's going to do.
Yeah, I know. It's kind of like, why do we even bother? Because the Fed's going to do what it's going to do when it meets.
Mike McKee pretty much laughed at me when I asked if January was in play.
It's like, Tim Stenevec. No, I know, but you never know. Like,
I mean, look what happened last month.
Things happen, right? I mean, if anything, we found in our year ahead pieces. I think about talking with Tim O'Brien from our opinion team who oversees that, Sam Potter on the markets and stocks team, is that there's just so many things in last year that we just weren't kind of expecting, and that happened. So things come out of anywhere. So that will change the market environment.
Well, let's see what Dana Dioria has to say about that. Dana's the co-chief investment officer over at InvestNet. It's the tech provider to banks and registered investment advisors. The investment platform has more than $6.8 trillion in assets on it, managed by many different folks out there. Dana, good to have you with us. How are you?
Good to be here. I'm great. Thank you.
So what do you make of the way that this jobs report changes the outlook for the Fed this year?
Well, certainly predictable how the reaction to it. I mean, it really was a blowout report. This was not, just a little bit more in terms of the non-farm payrolls. This was pretty much 100,000 more than what was expected. So not surprising that the reaction that the market had. Interesting, I guess, from the standpoint that the market had already, of course, from the last FOMC meeting, been pricing, lower expectations for rate cuts. And, those lower expectations, I think, to a certain extent, you could argue we're already sort of taking account of the fact that unemployment was still low, jobs market was still strong, and that the Fed certainly didn't have to move anytime soon. So I could argue this is a bit of an overshoot, that you had the information you had before. We were down to 50 basis points. Now, the market reacts again, whereas this report, blowout as it is, I think is, kind of confirmation of what maybe we knew was a possibility, which is that the Fed really isn't going to want to move. I think we all know the Fed at this point, the failure here is letting inflation take hold again. And so they're probably going to err. I think we all kind of recognize, right, to a certain extent, they're going to err on the side of staying higher for longer. this just kind of, confirms it.
Hey, what does it mean, though, for valuations currently on the equity side of things? I mean, if I look at the price to earnings, so just doing really basic on like something like the NASDAQ 100, it's about 32. If I look at it on the S&P 500, it's just about 24. So if we are indeed going to live in this higher rate environment, valuations, they've got to come down.
Yeah, look, 100%, right? Multiples work inversely. So if you have higher rates, you would expect multiples to come down. And we're already, as you just quoted, we're pretty high on multiples, right? I mean, if there's, a flying the ointment around the expectation that equities do well this year, it's where we sit from a multiples perspective. We have a very concentrated market. We have, a series of very large stocks that are, you just read it, right? Very high. The S&P 500 is very high, and that's driven even more by, kind of bigger names. So valuations do matter. I mean, I'm certainly of the school that you can't keep ignoring that forever. And, higher rates does work against price multiples being a continued driver of expansion in the market. So that's 100% fly in the ointment.
If U.S. stocks are expensive by some measures, by many measures, I think it's fair to say, is it time to look to emerging markets, to Europe?
Yeah, look, I mean, from a tactical perspective, if I was going to look right now at, what we see in the market in terms of a strong dollar expectation, a Fed that's not going to cut rates as fast as maybe overseas economies will more likely cut rates more quickly. That strong dollar is a headwind to the emerging market story for sure. So if you're thinking about it in terms of, hey, tactically, what do I think is the case? I mean, I think you have to include that, and you have to, think about within emerging markets, maybe where you want to be. But if you're looking at it where I think your question is, and it's a very valid one, which is, hey, look, at the end of the day, the market is valuing all those things. They've priced in everything that I just said, and having some diversification in that portfolio, particularly when the U.S. market is so concentrated, probably makes sense, particularly for long-term investors.
How do you define diversification then?
So it's interesting you say that, right? If you look at the academic research, theoretically, the most diversified portfolio is the total market, right? It's the market clearing portfolio. It's everything you can own. But if you look at the total market, that's pricing everything at the value in the market, and you're getting back to that place where, okay, but I've got by other measures, I've got some concentration risk there because I've got a lot of money. If I'm sitting in market or anything that's low tracking error to market, I've got a lot of money in those big stocks. And so I think, if you're thinking about it from that perspective, think about diversifying into smaller parts of the market. Think about diversifying, as you said, into international economies.
Okay, international economies, one area we could look. Private markets, though, for retail investors, something that's on your radar. Yeah. I know that the private equity folks would like more people to be investing in the private markets. But
what?
Yeah, more money out there. They want it in the 401k too.
Yeah.
Is this something that you could see moving away from the ultra high net worth folks and actually going to regular people?
Yeah, for sure. It's very much a trend. We expect the trend to pick up.
Is it a good trend?
I think it can be. Yes, I think it absolutely can be, because you're seeing a lot of the innovation that maybe was available in public markets now take place in private markets. And, if you're a believer in democratizing those types of those return streams, then yes. The devil in the details, of course, is what is the vehicle? Am I really getting access to these returns? And can I live with the illiquidity that comes with it? But I think the alternatives managers are seeing that. They're looking at, hey, DB plans are just not going to be the source anymore. It's all DC. How do we come down market to more of a retail audience? And they're innovating in their structures, interval funds in particular, right? So semi-liquid structures that are maybe more palatable to the audience in that high net worth, and even getting into the mass affluent area.
Hey, we got to run. Happy New Year. Good to check in with you. Dana Dioria, she's Chief Investment Officer of InvestNet. It's a tech provider to banks and RIAs. The platform has more than $6.8 trillion in assets on it. So great to check in with her from Pennsylvania. Having said that, folks, just about 10 minutes to go until we wrap up not only the trading day and a trading week. And I was just looking, the S&P 500, I think down about 2% for the week overall. Shortened trading week.
Quick correction, I put a wrong note in there, $5.8 trillion. That was my bad.
Oh, forgive me,
my
forgive
bad,
me.
Carol.
A trillion makes a difference.
Yeah, it does.
Hey, folks, do not go anywhere. We're counting you down to the close. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
As a matter of fact, I have seen this story. First of all, 7 minutes to go. We're going to head over.
I've seen this story.
We're going to head.
Seen this.
We're going to head over to.
It was published at 2:45.
We're going to, occasionally I actually do look at other things while I'm in our show.
Possible.
We're going to head over to our TV colleagues in just a few minutes, and we're going to count you down to the close on this Friday, wrap up the trading week and the day. But I was looking around for a story to chat with our TV colleagues, and I saw this, and I'm like, I don't know if we can do this. Has to do with Mark Zuckerberg, co-founder of Meta.
Heard of it?
He's still CEO, right?
Correct.
Yeah, he's still CEO. I never know. I forget sometimes he's
the OG, founder CEO.
He is the OG.
Yeah.
I've been so blinded by that nearly $1 million watch that he was wearing when he talked about maybe that they weren't going to kind of police.
Well, when you're worth $215 billion, a $1 million watch is like you and me going down to the Swatch store and picking up a Swatch.
I know.
Or even less.
Right, like when you put it in that perspective,
Yeah.
isn't that crazy? By the way, that's kind of a deep tease because we talk about that on our weekend broadcast and podcast. Our weekend broadcast is at 8 a.m. Wall Street time on Bloomberg Radio. Do you want to talk about this?
Yeah, I do. So Mark Zuckerberg went back on Joe Rogan. He's actually criticized the Biden administration, claiming the administration would scream and curse at Meta employees amid discussions about how to moderate content related to COVID-19 during the pandemic. Here's what he said, quote, "It was brutal." He said this during a close to 3 hour episode of the Joe Rogan Experience that was published today. He said the administration overstepped in its request to take down posts about the pandemic, including satire, sowing distrust among the electorate. He previously wrote about these complaints in that letter to Congress. That was back a few months ago, Carol, in August.
Wow. Yeah, he went on to say the U.S. government should be defending its companies, not be at the tip of the spear attacking its companies. In contrast, the Facebook founder said he's, quote, optimistic about President-elect Donald Trump taking the White House. He said, I think he just wants America to win. Yeah. Safe to say, there's been a lot of reporting, our reporting, folks weighing in on this and saying that, and as our reporting says, the Meta CEO has been repositioning his company to be much more Trump-friendly in recent months. Recently had dinner with the president-elect at Mar-a-Lago at his club, as we know, in Florida.
Not just that, but elevated a policy person to be the head of policy at Facebook.
That was a big thing that caught all of our attention.
Yeah,
right?
a longtime Republican who worked in the George W. Bush administration, and then also late last week announcing that Dana White of UFC, a close Trump ally, would be part of Meta's board of directors. Also, in the context of what's going on with TikTok, I think it's really important to watch what Mark Zuckerberg does, because if TikTok ends up going away here in the U.S., Instagram's Reels will be a huge beneficiary of that. I would imagine that a lot of those TikTok creators would move to a platform such as Reels, YouTube Shorts even as well. And that was one of the reasons why Trump said he switched positions on TikTok, because he didn't want Mark Zuckerberg to gain more power, and he thought TikTok was good competition. He had some choice words a few months ago for the Facebook co-founder and CEO.
I mean, it's a fascinating world that we live in, especially when we get into technology, when we get into politics and how the winds may change. Keep in mind that the now president-elect, former President Donald Trump, he was suspended from Facebook for about 2 years and then was reinstated. So there was a little bit of a battle, I think, safe to say, in terms of between the president-elect and the folks over at Facebook. And it's interesting just to see how tones change or tonality change.
Yeah, he was banned following January 6th and what happened on January 6th, 2021.
Right.
And you've noticed a lot of that there was a lot of focus on that in the couple of years, and that's not a focus anymore for folks. You saw that January 6th, 2025, with the peaceful transition of power, expected also on January 20th of this year. But a lot of social platforms banned the president-elect back then. You had Twitter doing that.
Right? Yeah, exactly. But it is fascinating to just see kind of how things switch in terms of positioning. Even if you think about the president-elect on how he felt about digital currencies, right? He wasn't a fan.
That's right. That's a good point.
But he's a fan now.
Called crypto a scam.
Yeah. Just weighing in that things are changing rapidly. It's why I think a lot of leaders have a tough time kind of trying to figure out what ultimately will be our policies moving forward. So we're going to be reporting on all of it, certainly here at Bloomberg. Speaking of that, folks, just a couple of minutes to go until we wrap up the trading day. Over to our TV colleagues. The closing bell starts right now.
Closing bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. Alex Steele has the day off. We're taking you through the closing bell with the global simulcast, joined right now by Carol Master and Tim Stenovic in the radio booth on what is an incredible day all around, not just for markets, but for the economy as well. An interesting data point coming out of the employment space, and of course, a market reacting to it in a very negative way.
Yeah, good news is bad news. How many times do we say that? We saw such a big move up in rates, and that's certainly significant in terms of expectations about the Fed. Having said that, I got to say, Tim, one of the things that we've talked a lot about, the airline sector today, courtesy of those Delta numbers and Delta Outlook, and you see the whole space up about 4.5%.
Okay, you're talking about airlines. I'm looking at yields moving higher because Alex isn't here. I don't know if Romaine or Scarlett is going to do yields in a minute, but Guys,
it'll be a surprise.
476 on the 10-year?
Yeah.
We're really talking about that again?
Yes, we are, man. 476 on a 10-year. You're talking 5 on a 20-year, 5 on a 30-year, a 2-year at 4.38%. Are you poo-pooing this?
I'm just gonna
Don't
say
poo-poo.
we have a couple of inflation prints next week, another one at the end of the month. I'm just saying we're totally data dependent, Scarlett, and I feel like things are gonna just keep moving back and forth.
It is, but the momentum is certainly for yields to move higher. And given the jobs report that we got today, you have Bank of America saying that the cutting cycle is pretty much over at this point, and the risk is that the next move will be a rate increase.
All right. I got a bone to pick with Carol, but we got to put that on hold for right now here. As we get the closing bells in New York, we have a lot to talk about today here. Of course, a monster down day for all of the major indices with the S&P 500. Looks like it's leading the charge down on the day, down about 1.6%. It always takes some time for these numbers to settle, but that's going to be the worst day going back to mid-December, and it's now back down to its lowest levels since November 5th. So erasing all of the gains on a year-to-date basis, and there were modest gains, but also erasing all of the gains since the election, with the asterisk that a lot of those big gains that we saw in the S&P came kind of ahead of the election as well. Down 91 points or 1.5%. The Dow down 700 points or 1.6%. The NASDAQ down 300 points or 1.6%. And look at the Russell 2000, a 2.2% decline here on the day. Mid-caps down 1.4%, and transports, Carol, down 1.1%.
Yeah, a definite negative tone, no doubt about that in terms of the equity trade. If you look at the S&P 500, most names in the index lower today, 434 to the downside, Scarlett, only 67 gaining some ground here.
Yeah, but the ones that did gain ground all belong, or not all belong, but many of them belong in the energy sector. That is the lone slice of the pie there. That is green. Energy index gaining about 0.3%. Utilities, the next best performer, down 0.6%, along with healthcare. Among your big laggards here, real estate investment trust losing 2.5%, financials down 2.5%, and tech losing about 2.25%.
All right, let's get to some of the individual gainers. I do have an energy name, in fact, on my list. I'll get to that in just a moment. I mentioned airlines, definitely outperforming today. Thank you, Delta Airlines, for being the catalyst, up about 9% at its close today. In fact, it is the third biggest gainer in the S&P 500 today, jumping the most in more than 4 years. I think we might have seen potentially a record. There was certainly one intraday. Carrier's profit beat Wall Street's estimates for the final months of 2024, buoyed by gains in both the U.S. market and overseas.
Yeah.
The company does not expect the momentum to slow in the new year. What do you got for me?
Well, can I just say, as somebody who's booked 3 different flights over the past couple of weeks, I understand why they're making so much money.
Where are you going?
It's a secret.
Oh, are you bringing me?
No, I'm bringing
International man of
Carol.
mystery.
Me and Carol have to talk.
Yeah, we forgot to tell you.
Oh,
Oops.
okay.
Yeah, actually hitting a record, it looks like, in today's session. Another one way outperforming, and that is Walgreens Boots Alliance, guys, up about 27%. This is your number one gainer in the S&P 500. Again, searching the most intraday, even after it reported, I should say, quarterly sales that surpassed Wall Street expectations, easing some pressure. This is a company that's thinking about a transformation, trying to figure out what it needs to be, what it needs to do, also mulling some strategic options, including a possible sale. So nonetheless, investors liked hearing that performance here. And one more, Scarlett, you mentioned the energy names. Constellation up 25%. Again, I believe closing at a record here, surging after it agreed to acquire the closely held Calpine for $16.4 billion, creating the largest fleet of U.S. power stations. So much of this and so much of the expectations and excitement over Constellation and other energy names has to do with powering all of the energy that is needed for AI. So anyway, this was a big outperformer in today's session.
All right, I got a constellation for you in just a minute. First, though, Apple shares declined by a little more than 2%
That's a great
today.
opportunity there. Great segue.
Thank you.
Constellation, the second biggest gainer in the S&P.
Yeah, but
Constellation Brands.
We'll figure out
the
another
biggest
way to
decliner
play it,
in the
yeah.
S&P.
Yeah,
Am I stepping on your toes, Tim? Sullivan?
Okay, let's do that one. Let's just do that one. 17% to the downside. They make Modelo, Kim Crawford, iWest Distillery, and others. Remember, we've been talking about the way that consumers are not drinking alcohol like they used to. The company cut its growth outlook for a second time this fiscal year. They missed quarterly sales estimates. They cited lackluster consumer demand. Shares fell 17%. The folks in the control room, they're not happy with me jumping around, but I'm going to go back to Apple because it was one of the biggest weights to the downside in the S&P 500. NVIDIA was the biggest one. That fell today by 2.4%. Shares down about 9% from those all-time highs back in December. You've got that noted analyst, Ming-Chi Kuo, who came out with a note that 2025 shipments of iPhone could be 8 to 10% below consensus. He published this in a post on Medium this afternoon, also writing that there's no evidence of Apple Intelligence actually driving hardware upgrades and service revenue. He's got a pretty good track record, so people watch what he says pretty closely. Finally, watching shares of insurance companies out of California as a result of these devastating wildfires. You got Chubb down, you got Travelers down. Allstate down today by 5.6%. Analyst estimates of potential wildfire-related damages continue to soar. JP Morgan out with a note, $20 billion. Our own Bloomberg Intelligence team out with a note as well that says it could exceed $20 billion. Southern California utility firm Edison International also fell today after the company is asked to preserve evidence in connection with the blaze. PG&E, I should mention, was lower too.
Absolutely. Well, let's take a look at yields, because the only thing more dramatic than what we saw in the stock market was the move higher that we saw in yields, a massive sell-off in the Treasury space. In fact, 6th straight day of selling that we've seen there. And take a look at the 2-year yield, up 12 basis points. Of course, that is the most sensitive to changes in Fed policy, 4.3792 and change, 4.7 on your 10-year yield, a 20-year yield closing above 5, and a 30-year yield that at one point in the session also traded above 5% for the first time in more than a year.
Yeah, pretty significant. Talking with our Michael McKenzie about rates. You know, we've seen the longer end of the yield curve moving up, but to see the short end really move up in terms of expectations for the Fed doing less here in 2025. All right, what caught our attention has to do with CEOs and big executives and folks on Wall Street. We're going to start with the CEOs, what we're seeing. Bloomberg Intelligence out with a report today. The headline catching our attention. CEOs are on a shorter leash thanks to shareholder activists. And they say CEO turnover is related to an overall rise in the number of shareholder activist campaigns. But what caught my attention is they say more notably companies that push out a CEO when an activist comes knocking are doing so with record speed. They're not waiting.
Yeah, CEOs lost their jobs due to activist pressure at a record pace in 2024. 119 were let go. It's about steady versus the record high back in 2023, but up about 26% from the 2018 to 2022 average.
Yeah.
So those activists, Romaine, they've got some power.
Absolutely. And speaking of CEOs, I guess stepping aside, we learned a little bit earlier, based on people familiar with the situation, that the CEO of Hershey's would step down. Hershey's is now confirming that, out with the public statement saying that Michelle Buck, who has been CEO of Hershey's since at least, I believe, 2017, will be leaving the company, but she's not going to leave until 2026, they're saying. They have launched a search for a successor, so she'll be sticking around for at least a year to oversee the company and presumably to help, of course, with that CEO transition. We should point out she's also been with Hershey's Food for about 20 years. She's in her 60s, so no sense here that she was forced out, but a changing of the guard for Hershey's.
Yeah, fits in with that theme again of CEOs being swept aside. Another big story that we've been focusing on here is bonuses, right? Because people are going to get paid their bonuses pretty soon at the big banks. We already know that Wall Street bonuses will likely jump by double digits, at least 10% at JP Morgan, at Bank of America, at Morgan Stanley. Deutsche Bank has signaled that as well, but they're tweaking their bonus formula, or how they judge bonuses, to incorporate factors like teamwork, which has got a lot of people nervous.
Wow.
How do you measure that?
Then we should all get a massive bonus. Although, Romaine, I don't know about that for you.
Yeah, that's all right, Carol. You know that any bonus I get, they just basically take from your pool. They say, Carol gets a little less this year, Romaine, because, we love you more.
I just want the popcorn upstairs, and I'm pretty happy. I'm just going to say.
I don't know what the popcorn is.
Yeah, I do.
Okay.
All right, do we have to run?
You do.
All right. On that note, feel better, get better. Everybody stay warm. All right, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We'll see you again, same time, same place on Monday.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week, a very busy week. Everything from a former president's state funeral, lots of tech news on NVIDIA, more out of CES in Vegas, and of course, big news on the U.S. economy in the way of Fed minutes, today's jobs report, and then there's everything happening in California with those wildfires, just some of what we're thinking about this week, and also the backdrop for Bloomberg Wall Street Week, coming your way at 6 p.m. Wall Street time on Bloomberg Radio and Television, where host David Weston and his team are doing a deep dive on Bank of America, looking at 15 years that Brian Moynihan has been at the helm, and also looking at the role of AI.
Which we talked about a lot this week, too. With
Brian Moynihan?
Thanks to CES. No, AI. But we'll,
AI.
Yeah.
Well, but we've married AI with This Weekend in Football. Right?
Wait,
go
Wait,
on.
what?
Because
Wait, what?
we're all going to be eating snack food through the football games.
Well done.
And how much more can we have than really generative AI fixing our snack food? So that's what we looked into.
How do you fix snack foods?
Well, you take it apart and with billions of different proteins and figure out what they are. And generative AI helps you do that, take it apart and re-engineering. So we actually went to there's a couple of former Mars executives who were developing snack foods
They
for
know
Mars.
about snack food.
And they've teamed up with a UC Davis professor who's sort of mapping all the proteins in all the foods, so how they taste and how they crunch things like that. And they've come up with a new company called Rivals. And so we went and talked to the leader of the startup company as well as the UC Davis professor. And this is part of what they had to say.
Now, for the first time in human history, we actually have a class of pharmaceuticals that's relatively safe, and it causes a decrease in food consumption. So in terms of demand, consumer demand will go down for certain types of foods that are less healthy, but consumer demand is going to go up for foods that are more healthy. And frankly, it's pretty clear from a business context that there's a gap in the marketplace for these healthy foods.
Tecopoulos' company, Pippa, targets uses of AI for food, working with a range of companies from the largest consumer packaged goods companies to startups like Rivals, where the focus is on fiber and protein over savory snacks full of sugar, fat, and starch.
Food is something that's underserved in terms of AI. We are at the precipice of something really big. We have a need to change the paradigm, and we have to be more sustainable. Going to our health, and for a healthy society, we need to generate a food that can keep us healthy in the long term.
Does the food industry, particularly some of the large food companies, because they're very big, do they know they're on the brink of something really big?
They do have realized that, hey, you know what, maybe there's a reckoning that's coming.
If I am a food company and I want to develop a new food, what does AI allow me to do that otherwise I could not do?
Yeah, excellent question. So what AI does is figuring out where you should focus. So imagine having all these variables, all these parameters. I mean, where do you start and what do you explore? Based on the velocity you have for your experiments, your formulations, or doing a tasting, right? So what the AI can do is quickly and dirtily, of course, make you focus on what matters.
So you have sort of a perfect storm here coming together.
Cool.
First of all, one of the things I learned is we are consuming way more snack foods than we used to. We're up to now 95% of Americans eat a snack every day, and on average they eat at least 3 times a day, 3 snacks.
Is a snack
This is huge.
Is a snack a certain type of food, or is a snack at a certain time of day? Is it outside of a meal?
Part of the issue is exactly outside the time of the day, because what's happened is lifestyles have changed, and fewer and fewer of us have regular times to eat. And so we just pick up bags of chips and sweets and things like that.
But it's
Looking at
like,
you, Carol Master, with that bowl of Cheerios.
If I do, or my bag, right? But if I do a cup of carrots, is that considered a snack?
No, that's not a snack food. No, but this is really snack foods. The way we all know them, Frito-Lay and things like that.
So it's the popcorns I pick up on the way out.
And you put that together with the GLP-1s, right?
Yes.
Mean you have a somewhat reduced appetite, but you actually need more protein than you had before, and how you can be healthier. And of course, we've got obesity problems coming up the kazoo. We've got real problems, and this is intended to address that.
So I look at the snippet of that interview, and I look forward to seeing the whole show tonight to see everything. But I wonder about if you can make something healthy that is still processed, and that's been a big topic of conversation. If something is packaged, if it's processed, if it has preservatives, if it's ultra, this idea of ultra-processed food, even if AI helps develop it and it has more protein, is it healthy?
Yeah, the thing is, processing, what they do is they take organic compounds. I mean, it's peas and things like that, but they figure out ways of combining them and also put it through something, again, I didn't know about, called a food extruder, virtually, like more than half the food that you find in a supermarket is put through an extruder. It's how they make these chips. If you do it with starches, you can get it really crunchy and really good, and sugars.
Yeah.
The problem is if you do it with healthy, organic things, it's not as crunchy, it's not as good. And what this allows you to do is to tell you how to process that, put the right things together and process it the right way, so it actually is crunchy and does have flavor.
I am curious about the big, food companies, the packaged food. Like, are they doing it? They really own this market, control this market. Like, you got to get them to change.
Yeah, they certainly know about it, and they are using AI, but for the most part, at least what we learned through our reporting was, most of the big food companies are really focused on increased efficiency in what they're doing right now, and generative AI is allowing them to do that. They are not turning around altogether to focus on AI. And what we asked, obviously, the former Mars executives, why is it that the Nestle's of this world and are not doing this? And they said, it's a big battleship. And they're not going to turn that battleship unless there's a real need to do it. Yeah. And therefore, you have a startup who says, let's start from the beginning and maybe get bought.
Yeah, that's what I was thinking. Let the startup take the risk, let the VCs take the risk, and then come in and buy it when it's a proven concept. Right. We see that with CPG
But it's a real use case for generative AI as we're looking around for what we're going to do.
Is there any food for you to eat yet?
Oh, yeah, there is. I should have brought down. It's good. It's good. I'm not going to say it's a Dorito, but I'm sort of weak for Doritos. but it's crunchy, and you would recognize it as a regular snack food that is healthy for you.
If you care about doing the right thing, the responsible thing, and you care about your workers and, society at large, you think you will do, you hope that executives will lead that way. Speaking of such, you do have a leader that focuses on responsible leadership.
Yeah, well, it's Brian Moynihan. We had an extended session because this last January 1st was the 15th anniversary of his taking over Bank of America. And the bank is doing very well. No kidding. And considering where he started, I mean, now they've had 10 straight years where they've made at least $15 billion a year. And their stock price is up and the price to book ratio is up, things like that. You forget that when he took over, it was a real mess. First of all, they were putting together 4 or 5 different companies. Remember Merrill and Countrywide and all of those companies being put together in the middle of a great financial crisis. And there were people who doubted that they could come up with the capital needed to keep going. And you remember Warren Buffett gave him a $5 billion loan at some point, and we talked to him about that. He said, you know what, we didn't need the money. And when Warren called me up, he said, you don't need the money, and that's why I want to give it to you. But it helped them because it was a real vote of confidence at a time that they could use it.
So are we going to have this conversation in 15 years about Brian Moynihan's 30-year legacy at Bank of America?
He says he's going to stay there until the board says he should go someplace else. He's not going, and he thinks there's more to be done. But we did talk about what does the next CEO need to be able to do for Bank of America. Whoever it is, whenever that happens, what qualities would you be looking for in the next CEO? And not surprisingly, it all comes back to tech. That it's really tech. Wow. It's digits and it's AI and things like that, and that's what's got to be embraced. He would believe and hope that it's true to the DNA that he's created. It's the responsible growth thing that he put in, which actually I pushed him on because they haven't grown as fast as JP Morgan. And he said, no, it's responsible growth. When we put that in, it wasn't an emphasis on responsible. It was also on growth. We wanted to keep growing, and we thought at that point people would stop growing.
Was crypto part of that digital tech thing?
But Brian's not the biggest fan. He loves blockchain.
I don't know that anybody.
He defends blockchain. He's not as sure about the crypto.
Our Charles Schwab CEO said that to us when we interviewed him back in November. That he wouldn't add crypto to his personal portfolio, but he missed the boat on it.
Yeah, well, anybody who didn't buy it, when it was pretty cheap, I guess feels like they missed the boat. But the point is, I think there's nothing wrong with it. If you want to do it, I have said to my 22-year-old son, nothing wrong with it. Like there's nothing wrong with going and putting it all on Red 9 at Las Vegas, and you might make a lot of money off it. That's great. But don't kid yourself. But that's my personal. I'm an old guy, and so I'm skeptical. I just don't quite get the use case.
All right. Thank you, David.
Always
appreciate it. Looking forward to Wall Street Week coming your way at 6 p.m. Wall Street time on Bloomberg Radio and Bloomberg Television, Bloomberg Wall Street Week with David Weston.
Hey, just a reminder of how markets closed out this shortened trading week as a result of the equity markets being closed yesterday. The S&P 500 fell 1.5% today. A lot of red on the screen, Carol. Speaking of red.
How about a little red sauce
How about a little red sauce on this Friday afternoon? We've got the CEO of Carbone Fine Food coming up next.
Speaking of food, we might ask about AI there as well.
Yeah, I'm going to eat some pasta sauce.
Of course you will. This is Bloomberg.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. A Friday sell-off, Jobs Friday. The Dow, the S&P, NASDAQ end of the session deeply in the red, wiping out gains for the year. Right to the numbers here with the S&P down 91, finishing the week, heading into the weekend at 58.27, a drop today of 1.5%. The Dow down 696 points, a decline of 1.6%. The NASDAQ Composite Index also down 1.6%. Broad-based selling with the Russell 2000 Index of small-cap shares down 2.2%. 10-year, 4.76%. The 2-year yield, 4.38%. And the 30-year briefly touched 5%. Spot gold up $25 the ounce, up by about 0.9%. West Texas Intermediate crude up 3.7%, $76.69 per barrel of WTI. Bitcoin up 2.9%, 94,825 on Bitcoin. Constellation Energy has agreed to acquire closely held Calpine for $16.4 billion to add scores of power generation assets across the U.S. as the nation's electricity demand is forecast to surge. Constellation up by 25.1% today. U.S. Supreme Court justices have signaled they may uphold a law banning TikTok in the U.S. if it is not sold by its Chinese parent company by January 19th. U.S.-based social media names advanced on a down day for the rest of the market. Meta Platforms, parent of Instagram and Facebook, up 0.8%. Snap Inc. up by 3.6%. And sources tell Bloomberg Hershey is poised to announce a leadership transition plan with CEO Michelle Buck stepping down in mid-2026. Hershey shares today down by 2.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
It's 5 o'clock somewhere.
Oh, well, that means red wine, right?
Exactly. Or
a little red sauce?
I'm thinking.
You know, the marinara sauce aisle at the grocery store these days, Carol?
Yeah.
Not what it was like when I was a kid.
No.
Where it was like all Classico and Prego. Remember that? It really was.
Can I just wait? Before you go on, I'm just going to say my mom has always made homemade.
Wow.
I know. I was spoiled. But go ahead. Go on.
Wow.
Go on. Because not
right.
everybody
No shade to Susan Stenevec.
She was also a stay-at-home mom for a while, so she could do that.
Well, the aisle has moved upscale with more boutique options, including Rayo's and the sauce from our next guest company. Eric Skay is CEO at Carbone Fine Food. It's the maker of marinara, spicy vodka, tomato basil, arrabbiata. You like that?
Wow.
I practiced that one earlier.
I
Alfredo
bet.
and more.
That's
Eric
where
joins
you
us
went
here.
To. You disappeared for like an hour or so.
I was just holding a bottle in the Bloomberg Interactive Brokers studio. Eric, good to see you. Okay, Carol and I were talking about this. Carbone Fine Foods.
Right.
Carbone, the restaurant, which is owned by Major Food Group. Let's start there. What's the relationship? Just settle the score for us.
Major Food Group is majority owners of Carbone Fine Food.
Okay. And inspired by the restaurant?
Inspired by the restaurant, yes.
What you get in a jar at the grocery store from Carbone marinara, do you get that at the restaurant Carbone?
Yes, I mean, as close representation as you can make going
that's
into
the idea.
Commercial kitchen, absolutely.
Okay.
All fresh ingredients, tomatoes from Italy, onions are chopped on site, garlic's minced on site, basil is hand stripped on site as we produce the product, and it cooks for an hour to an hour and 10 minutes, meeting your homemade taste. We look for restaurant quality. And Mario Carbone is very passionate about that. So he tastes everything.
I kind of love it when I roll over to ingredients and what you're seeing is everything I understand. And there's no chemicals, there's no nothing like that. I mean, that to me is super important. How do you, though, make sure that it is as good as the restaurant?
So, I mean, look, we're very, very involved in the manufacturing of this. So the first year, I tasted personally every single batch before it was allowed to go in a jar.
How'd that go?
Now, obviously, I have a staff now. How'd it go? 100,000 miles on United without leaving the country. I live in Las Vegas, so that's my fault.
How many times did you taste something you're like, nope, nope, nope? It sounds like a lot.
Not that often, because I work with people that I trust that are very, very good at doing this. It's a very specialized process. No one wants to cook for an hour in a manufacturing facility.
Right.
So those who do it are as passionate as I am about it.
How do you control that? Because, I mean, I would imagine you have manufacturing facilities in several parts of the country. It's not necessarily centralized in one place. There's
it is.
Ingredient variabilities based on seasons and those tomatoes that you do get from Italy, how do you control for those things?
So the tomatoes you get from Italy are going to be fairly consistent. They come in. We open up number 10 cans just like the back of a restaurant. So it's not big drums of tomatoes. They're packed just in tomato season, and that's the tomato we use. So I mean, to your point, I might be able to taste a slight variation in fresh basil because it was hand stripped at a different time. We've never gotten a complaint.
Go ahead. Is it in different parts of the country where you actually do the manufacturing?
No, most of it's here in the East Coast. We have a couple of co-packers set up that we work with, but we have a primary that does a good majority of it.
All right, great bottle, Carbone name, very prominent. Why are they doing this? Why do they need to do this?
You know, that would be a question for Mario. But you know, as I've seen him ask that question, he's got X amount of restaurants, and not everybody can get to his restaurants, and people want to get there.
Yeah.
So he wanted to put something in a jar that represented the restaurant and allowed people to taste the experience of Carbone. And that's why we're so passionate about what goes in that jar, tasting better than anything. Our recipes on our site were developed by Carbone chefs. So we've kind of kept them simple so the home cook can make it, but they're really good recipes.
Does it create a significant revenue stream potentially? I mean, you understand this industry. We didn't, you know, you're a former CEO of Rao's, you know, someone who's been in the food and beverage, area for a long time. Is it something though, when you have a name that's known, that you can build a significant revenue line?
Yeah. I mean, we just finished our third full year. We've done 18 million jars since we launched. We're in 24,000 accounts, and we're the number 7 brand in America, number 2 in natural foods. So it's went very, very fast. And it is in large part because we had a name that we could leverage from a awareness standpoint.
Yeah.
You know, awareness was not massive in the Midwest, for example, but it was known by enough people to start something.
Yeah.
And then, you know, then the blocking and tackling happens, building a brand.
Okay, so this is not your first rodeo, as Carol mentioned, your first red sauce rodeo. 2016 to 2018, CEO of Rao's. That was the period it was acquired by Sovos for more than $400 million. Then a couple of years later, I believe it was, 2021? 2024? Yeah, 2024.
Yeah.
When Sovos closed its acquisition, or when Sovos was bought by Campbell's for $2.7 billion.
Yep.
Obviously, some big growth in the space over the last few years. What do you see as driving the growth, and how much growth is left in sort of the premiumization?
I think it's significant because of the premiumization. Right? Rao's started that trend when they put the first jar on the shelf in 1992. So if you think about it, it's a long time ago. So this has been a long, slow build. The consumer, and you think about other categories like craft beer, right? That premiumized years ago. So ice cream premiumized with Ben & Jerry's years ago. The premiumization in every category is happening. Pasta sauce finally got its turn, around 2015, 2016, where it started to really, really drive from a premiumization standpoint. And people are just looking for healthier, better ingredients.
I agree. Listen, I can't tell you, I've got a 21-year-old, and the same thing. We turn everything around, and we want to know what's in it, and we want to make sure we understand the ingredients. I am curious how big you think it can be, how big you want this brand to be, and is it a case of you're going to follow the model of selling it off at some point?
There's no decisions made. My partners are young. Jeff, Mario, and Rich are in their 40s, right? I'm the old guy in the room, and I love what I do.
Yeah.
So I'm in no rush, and I actually, I would have never envisioned doing a startup. I went from Rao's to another run where I took a company through an exit, and I didn't want to do that. So that's why I went to startup. So we don't have a timeline. We believe there's a tremendous amount of growth, not only in sauce, but in Italian. Like, we have a platform brand that I could, if we wanted to, go beyond. We see a significant amount of growth in sauce in the next 2 to 3 years.
Yeah.
So I'm not doing anything. I believe in maniacal focus when something's working. So it's working.
Yeah.
$8 to $10 roughly.
Give or take, yeah.
For a jar.
Mm-hmm.
Are you seeing any pushback from consumers on higher price stuff as we speak?
Not that I'm seeing. I mean, of course, people will make comments. friends in general, or my brother who waits till it's on sale to buy it. But
I think we all have brothers like that.
But for the most part, I think
you can't hook them up. I mean, come on.
I think Rayo's has. I give Rayo's a lot of credit, and the people before me who built Rayo's slowly and painstakingly. Right, they really did a good job, and they built a model, and they built the category. So that 8 to 10 is not sticker shock for everybody anymore. It is for certain people. And I get it. But once you try that product, the amount of care we put into what goes in that jar, it's worth it.
Here's a problem, Carol.
What?
Feeding your kid the pasta sauce that you buy as adults.
Yeah.
Because then they get hooked on it. And then you find yourself in situations like us ordering huge jars.
No.
And then they're like, I want, the
That's a
Rayos.
problem?
Yeah, well, I mean, that's the expensive pasta sauce.
And that's the thing. I mean, not every pasta sauce is the same. No doubt about it. How do you manage the growth or the expansion of the brand in a careful, thoughtful way? And do you need to?
Yeah, of course I do. I think brand is everything. So you have to make sure it's working before, if you've got initiatives and something's not working, fix that before you move to the next thing, right? We grew fast because it was working. But had I saw, some resistance, I would have worked on figuring out that resistance before I expanded. I started in the Northeast, and my intention was to stay there for 18 months. Huh. But within 18 months, I was national, right? And I didn't expect that. The intention was to go slow. I didn't expect it to go as fast as it did.
So stores were asking for you guys, or what?
We had stores asking for us. We had, everything. The customer that I thought would adopt it immediately took 1.5 years, which was Whole Foods. But we started in 21.
Yeah.
Pandemic, a lot going on, buyer changes, so on and so forth. So it took a little longer with that particular chain. But now if you go into Whole Foods, we're very well represented.
Hey, one thing I noticed about your career is you've been in this industry for decades at this point, and you started off, you really rode the wave of different trends at different points in your career, like the juices in the early part of your career, like Fresh Samantha's, Naked, Odwalla's, and those sorts of things. And then popcorn, Rayo's a little later in your career. What's the trend that you're seeing play out right now, sort of the next trend?
It's really hard to say in today's world. It's gotten muddy, but anything that's going to be higher protein is on point. You did a segment on GLP-1s. That's going to drive, I think, new innovation.
That's real, right?
Yeah, and healthy innovation. Everything points to at least a doubling in usage in the next call it 5 years, and the households that are on it, they're actually showing a decline in how much they purchase at grocery stores. So it's interesting. Much bigger decline in convenience stores, because if you think about snacking, right, that's what's going to get hurt, right? I think good food is always going to do well. That's the way I look at it, in healthy food, because those people, just having interviewed a couple, they tend to get healthy. Some of them tend to get healthier at the same time.
How does that happen?
So they're looking for better ingredients.
Is it like the visceral reminder that you're stabbing yourself with?
Don't know.
A pen weekly?
Well, I think,
or something?
I know initially from folks who've done it too, I mean, they don't like the taste of food, right? And so they kind of, I don't know, they almost kind of go through a little bit of a cleansing to some extent. And think, I don't know, it's just interesting to watch.
That could be. I do have a daughter that is using it, and that when I say I interviewed someone, it's close. It's close to me.
Yeah.
But she's like at Barry's boot camp in the morning now, and really healthy.
Yeah.
Which is great. It's great to
really
see.
cool.
You do wonder if it's a case of, and not necessarily for your daughter, but others who tried to lose weight, couldn't lose weight, or whether it's because they're diabetic or whatever, and finally can, and I think it feels really good. They feel so much healthier.
Sure.
And I think want to kind of stay in that place would be my gut. But so I'm curious, if GLP-1 is really ultimately the driving force in a lot of the food companies, is it upstarts that all of a sudden become the giants, or do the giants have to buy the upstarts because they've got to catch up and they evolve, they're disruptive? Like, how do you see that playing out?
I think it's all of the above. I think you have new product development going on in big food already, would be my bet. I mean, I don't know that certainly, but that would be my bet. And they're going to look at upstarts because sometimes buying growth is easier than creating it. So.
What about the beverage space? We've been talking a lot about non-alcoholics, kind of a tease for some of our conversations on our weekend broadcast, but we are increasingly, we often do, no joke, a wine segment on Friday or a liquor segment. And we've already had a couple of non-alcoholic guests.
Yeah, our
over
pursuit
the last few
section in
weeks.
our Bloomberg Business Week, the year ahead. Is it the year ahead issue, or is it's just like kind of a preview?
Yeah,
No.
I'm not sure which issue.
Well,
it is,
anyway,
but yeah.
there's a huge section on
Sorry.
non-alcoholic drinks, and the innovation that's happening there is pretty incredible. Are you seeing that among the folks you are? You're kind of part of a group where you've been innovators in the food industry for the past 20, 25 years.
Yeah, I mean, massive trend. The whole move to non-alcoholic is really being pushed by Gen Z, who's just not drinking as much. And, having kept in touch with a lot of folks I know in the beer industry. I sold a lot of beer distributors and have a lot of friends that sell beer distributors. They're struggling. I mean, when I say struggling, they're struggling for growth.
Yeah.
I can't say their businesses are struggling. It's just they're not selling as much as they used to, and they're having to make the necessary changes to that. But a lot of them are getting into non-alc in a big way.
I mean, Constellation Brands lost almost a fifth of its value recently
Yeah.
when they missed quarterly sales estimates, citing lackluster consumer demand.
I mean,
that's a big deal. Yeah.
This gentleman next to me, my co-host, I mean, you're a non-alcoholic folk.
Yeah, it's the
part of that group.
And I noticed it among friends too, where everybody's
Yeah.
drinking less at this point. So back to Carbone and the innovation here. I was pretty shocked when I was preparing for this, and I went to the website to see just how many varieties you have of this. Is there a plan to push beyond red sauce, or is it just variations on the red sauce?
So we're in red already. We're in white already. So we've got Alfredos on the shelf, and 5 of them in Whole Foods. They all haven't been announced. Red, I think I still have ideas. So there's going to be new reds. Like we just launched one. Puttanesca is a famous Italian sauce, but it just doesn't sell in the United States. People don't understand the word, and anchovies are polarizing. So I created Mediterranean marinara, which is with olives and capers. And I took the anchovies out, and we took the name off, and we're going to see how it does. It's on the shelves in one retailer right now, and initial pull looks very strong. So, we'll see where that goes. So white will be definitely a drive. Pesto will be in the future. I have something that I'll announce at some point.
Give us a little hint.
That it is going to be interesting in the red space.
But you're still in sauces. You don't see it moving beyond sauces.
Not for the foreseeable future, because if something's working, why would I dilute the focus of my team, myself, my chef? We have a full-time chef that
But you do
does
sell
nothing
some
but develop things for me.
I mean, you look at the website, right, too, and you do have, some little gift sets that you do that you can buy with some pasta. Is
Good
that
apparel selection too.
Yeah. I mean, do you expand this out too potentially?
So I got to tell you, Mario Carbone designed that apparel, and it's amazing. And like the celebrities that have been seen wearing that apparel so far, it's a great marketing tool. Mario himself is a fashion designer, so it's just really been helpful to us. So I see us doing a little there. I don't think it'll never become a primary business. The gift sets will never become a primary business, but they're a reminder. When you get a gift and there's Carbone in it, it reinforces the brand.
Hey, I think a lot of people see Carbone in the grocery store and they equate it with Rayo's and sort of that same level of premium. Contextualize for us their scale versus your scale right now, and to what extent you're sort of nipping at their heels.
I mean, they're likely at this point, I have to do some math, but 8 times bigger than us in sauce, 9 times bigger than us in sauce. It's interesting because initially I thought we would be pulling a lot from Rayo's, but we have a Gen Z millennial consumer. If you think about the owners of the company, they're in that age group. If you think about how they hit pop culture, right? Everybody wants to go to Carbone, and then they talk about it when they go to Carbone. So we get all of that awareness from the restaurants, and it is to a younger consumer. So I don't think we bought at Rayo's at all. I mean, as a matter of fact, their growth, given their size, is still very strong.
Wow.
So, I mean, look, we're the fastest growing in America, but we're 6 spots behind them in the list, right? So, my goal is to get there one day.
What are you having for dinner tonight?
What am I having for dinner? I will be on a plane.
I knew he was going to I was going to say, we have to let him go. He's got to get to Newark Airport.
Probably a Cliff Bar.
I'm so sorry.
All that flying from Vegas, it's not even a hub. So you're like doing a lot of connecting flights.
United to Newark's not bad.
Okay.
It's direct. I'm good.
Keep us up to date when you're ready to talk about the next thing.
I will for sure. I mean, we always have development going on, and it would be great to let you know about it.
All right, Eric Skay, thank you so much. CEO of Carbone Fine Food, joining us right here in our Bloomberg Interactive Broker Studio. Thank you.
Hey, let's go over to Charlie Pellet for an update. He's been following everything happening in the after hours and really how things went in today's trade. Hey, Charlie.
I want to extend the red theme because that's what I got on my screens right now. A lot of red. The Dow, the S&P, NASDAQ all declined today. S&P down 91, drop of 1.5%, now at 58.27. Dow Industrials on this Jobs Friday down 696, down 1.6%. NASDAQ also lower by 1.6%. 10-year at 4.76%. The 2-year 4.38%. Gold advanced 0.9%, 26.90 the ounce, and West Texas Intermediate crude oil up 3.7%, 76.63 for a barrel of WTI. So steep losses for the U.S. equity market today, but what about the market reaction after the jobs report? Dana Dioria is the co-CIO of Envestnet. She was a guest right here on Bloomberg Business Week.
I could argue this is a bit of an overshoot, that you had what the information you had before. We were down to 50 basis points. Now, the market reacts again, whereas this report, blowout as it is, I think is, kind of confirmation of what maybe we knew was a possibility, which is that the Fed really isn't going to want to move.
Dana Dioria of Envestnet, interviewed on Bloomberg Business Week. U.S. Supreme Court justices signaled they may uphold a law banning TikTok in the U.S. if it is not sold by its Chinese parent company by January 19th. Now, among U.S.-based social media names, Meta Platforms today was up 0.8%, Snap Inc. up by 3.6%. Donald Trump, the first former U.S. president convicted of a felony, was sentenced by a New York judge today to no jail or probation for his hush money case. And just getting word that President Biden will be delivering prime-time farewell address from the Oval Office on Wednesday, 5 days before Trump is sworn in. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week. We want to get to a story for our Bloomberg Business Week team, Amanda Mull specifically.
Amanda Mull is senior reporter for Bloomberg Business Week. She joins us here in the Bloomberg Interactive Brokers studio. In addition to having a little wine on Friday afternoons, we like to kick it around with Amanda because she's always writing about something topical.
She's just fun. It's what we need to get started over the weekend.
So
let's just be honest.
We spoke earlier with Caroline Hyde, and we talked a little bit about how the Supreme Court signaling it's likely to uphold this law that would ban TikTok in the U.S. if it isn't sold by the Chinese parent company. The implications of this go far and wide. We talked a little bit about where the do we still call them influencers, content creators go? Do they go to Reels? Do they go to YouTube Shorts? What about the brands, though, that have come to rely on TikTok?
The brands are sort of in a tough spot, and it sort of depends, the nature of that tough spot depends on what scale of brand we're talking about. A lot of public companies have had a real boost in revenue, in consumer sentiment, in eyeballs on their product because of just overall TikTok trends. The best example of this is e.l.f., the cosmetics brand, but also Sephora, Ulta, lots of different beauty brands, supplement brands, fitness, food, all kinds of stuff has had a real boost. And those companies are going to have to look elsewhere for their sort of viral day-to-day relevance in the conversation, in these sort of internet generated trends. And then you've got another scale of brand, which is the tiny ones, which TikTok has really been great for brands that sort of come out of nowhere, and there's no way to replicate that.
You're talking about unpaid not marketed stuff, right?
Sometimes.
Okay, so sometimes it is, because we talked about Zyn and Zinfluencers this week, and that big story, the big take from last week, where, Philip Morris International is not paying these people to do Zyn-related stuff, but they're doing it. Are you saying that brands are actually paying for content in addition to, people just using the content for tutorials and other types of videos?
Yes, absolutely.
What's more?
It depends on the brand, honestly. There are brands that have that have gained a real benefit from their popularity on TikTok that did not go into TikTok trying to seed any of this activity. But then there's also brands that saw the possibility of TikTok popularity and saw that like their competitors were gaining an advantage on there, and they start seeding products with influencers, sending out gift bags, sending out opportunities for sponsored content, long contracts that has an influencer drinking a particular soda or using a particular eyeliner or whatever over and over again on TikTok. And sometimes these things are disclosed to watchers. Sometimes they're not disclosed. They're supposed to be disclosed legally.
Is that a law?
Wait.
Yes, they're supposed to be, but yeah.
I'm thinking about our environment today, right? And all of the kind of trade wars, the pandemic, and you hear a lot more companies kind of exploring having nearshoring, onshoring, having more supply chains. Mm-hmm. If you're an influencer, aren't you on multiple platforms? Or that's not necessarily the case. A lot of them are just all in, whether it's a brand or an influencer, all in on TikTok.
The more sophisticated ones are sort of and have been trying to move their audience like around to different platforms to gain a following on Instagram, on YouTube,
right,
wherever else they can. A lot of them also have a Substack or some other type of newsletter so that they can own their subscriber list to a certain extent. But a lot of the nature of TikTok fame is that a lot of people who like weren't necessarily trying to get TikTok famous just sort of got catapulted into a certain amount of visibility by the algorithm and decided to go all in on it. And these are people who weren't necessarily prepared with like strategic vision about like what they should be doing to shore up their future. These are young people who don't necessarily have a lot of experience with being in the public eye. So like the type of people that have often come up through TikTok are sometimes in a situation where they didn't really have a realistic expectation of how to future-proof their businesses.
So what happens? So what happens if it goes away? Does all of a sudden, maybe I'm showing my age, but like I look a lot of stuff on. I'm not on TikTok.
I'm not talking either, Carol.
Okay.
I'm not talking. You do.
But
you have to for work.
But I see a lot of stuff on Instagram. Do they move to Instagram? Like, where do they go?
Well, I think a lot of the money is going to Instagram. The folks that I spoke to for this story said that like brands, influencers, content creators will probably try to sort of like recreate TikTok's energy on Instagram because it has a short form video product in Reels. It has like an existing large user base. It's got a lot of young people, a lot of women, but
you should see Tim's Instagram, the dance ones. They're really great.
Yeah, she's totally making that up.
They're not happening.
Can you imagine?
I would love.
Yeah, well, not happening.
Okay.
But to be honest, it does seem, and I don't have, I have TikTok. I don't have the app on my phone anymore because it was so addicting that I was like, I got to get rid of this thing or else I'm toast.
Yeah,
I'm done.
I totally
That's the
get
end of Tim.
Right.
So I got rid of it. And Instagram, though, it's so clear that they've copied it with Reels. But what do they not have that TikTok has?
Well, the main engine of TikTok's popularity and its explosive growth over the past 5 years has been its algorithm. TikTok is a platform that it broke a little bit with like the traditions of social media as Americans know them, in that you don't really like follow. You do follow people on TikTok, but you see a huge amount of content from people you don't follow, and seeing that content, seeing the things that sort of surprise you or come at you from like an unexpected angle that you didn't know that you were interested in has been sort of the bread and butter of TikTok. It's always a new experience. It's always something out of left field that you're like, wait, what? That is really great at pulling people in, and like Instagram doesn't do that.
I kind of think about it like it's a very engaging version of channel surfing, like I used to do when I was a kid, but it's so much more engaging because it knows you so well.
I just think about like when somebody goes on Shark Tank and it's like, hey, I've got this many followers on TikTok, and they're always blown away by it when it's like a young business or startup business. So I don't know where they go.
Yes, and it's interesting because TikTok followers, like in absolute numbers, are not as valuable as Instagram followers because people have smaller followings on Instagram.
We got to run.
Okay.
All right. That means you need to read her story. Amanda Mull, senior reporter at Bloomberg Business Week. Check it out online.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Masser. I'm Tim Stenovec. Carol, as we head into the weekend, the focus certainly on Southern California, Los Angeles specifically, where 29,000 acres, more than 29,000 acres have burned, and more than 150,000 people remain under evacuation as a result of these wildfires.
Yeah, we're following our live blog, and it continues to, thankfully, be updated by our Bloomberg News team that are on the ground out there on the West Coast, really throughout the news organization, updating everyone on the situation. And among the updates includes one that says California Governor Gavin Newsom said he is calling for a probe of the loss of water pressure and the reported lack of water supplies from the Santa Ynez Reservoir. He says, putting out a tweet on X, I am calling for that independent investigation. I mean, this is something, he says, we need answers to ensure that this does not happen again, and we have every resource available. And so it's a much longer read if you want to go and check it out on social media. But I think what's interesting is that this is something that President Biden commented on, saying that there really wasn't a shortage of water, but it sounds like the equipment, the pumps, there may have been problems in terms of providing the needed water to fight the fire.
Here's how Governor Newsom addresses it in the letter. He says, quote, the ongoing reports of the loss of water pressure to some local fire hydrants during the fires and the reported unavailability of water supplies from the Santa Ynez Reservoir are deeply troubling to me and the community. While water supplies from local fire hydrants are not designed to extinguish wildfires over large areas, losing supplies from fire hydrants likely impaired the effort to protect some homes and evacuation corridors.
All right, listen, this is going to be a lot of investigating and trying to find out exactly, first of all, you know, what happened in terms of dealing with the fire, whether or not there were any issues. The other thing is, of course, trying to find out where it started. Having said that, we talked with our own Matt Palazzola about the insurance side of it, and we're getting an update on the Eaton fire burning above Pasadena. The number of structures damaged or destroyed has grown to 7,000, according to the LA County Fire Chief. There, the fire's burned almost 14,000 acres and is 3% contained. So I thought what was striking from what Matt said earlier is that how the number of structures had moved up. He doesn't expect it to continue to kind of multiply at the same level we've seen in, let's say, the last 24 or 48 hours. But still, you know, we continue to assess the damage because the fires are not out completely.
Yeah, our live blog also with an updated map that shows the areas in Los Angeles that are currently burning. The Palisades fire continues to burn. There's the Kenneth fire that's just north of the Palisades fire. And then over south of Santa Clarita, the Archer fire and the Hearst fire are burning as well. Or I should note that the evacuation orders and evacuation warnings are in the Archer fire area too. Then there's the Lydia fire that's just a little northeast of the Hearst and Archer fires. And then down there in Pasadena, the Eaton fire that you just mentioned, Carol, 7,000. It has grown, I should say, to destroy 7,000. That one has burned close to 14,000 acres and is 3% contained.
I will say, too, there was another story that I saw earlier, and this had to do with, I think there was concerns about insurers pulling out specifically, and you did see California coming out, banning insurers from canceling or not renewing residential property policies in the Los Angeles neighborhoods that were affected by the blazes that destroyed so much of the city this week. The state's insurance commissioner, Ricardo Lara, issuing a one-year mandatory moratorium to shield those in the neighborhoods or adjoining zip codes of the Palisades and Eaton fires, whether they suffered a loss or not. This is according to a statement published late yesterday, LA time.
Also, the governor and Los Angeles Mayor Karen Bass, they've been defending themselves against mounting criticism over their preparedness for the wildfires that swept through Los Angeles. In a post on X, Governor Newsom's office said that since Governor Newsom took office, the number of CAL FIRE personnel has nearly doubled to 10,741. Republicans have accused him of cutting funding to the statewide wildfire fighting agency. The mayor of Los Angeles, Karen Bass, did cut $17 million in funding from the LAFD. During a press conference on Thursday, she said the cuts came during, quote, tough budgetary times, and they didn't impact the fire response.
Yeah, I think there's going to be some questioning about that because the cuts, I think, coming right late last year or being, Did the cuts come last year?
I don't know when the budgetary process is and when the fiscal year is, but this has been one of the main criticisms, and especially the fact that she was out of the country in the early part of the fire that she has faced as she has returned during this.
There's been some interesting interviews, too, with Kristen Crowley, who's the LA fire chief, too, about that in terms of deployment and, you know, talking about these budgetary cuts and raising the concerns. And so the logical question is, well, okay, so if we had these cuts, was not everything that needed to be done in place to fight these fires? So whether or not the LA Fire Department indeed had the necessary capabilities.
Yeah, look.
I think there's going to be a lot of questions.
A lot of questions. Also, I think there's going to be a lot of questions about,
like, did any of this hinder the responses? I guess the question at this point. And I don't know. They're going to have to find out.
and also just the fundamental fact of living in areas that these days are increasingly prone to fires.